All right. Good afternoon, everyone. Just get started here in a brief moment. This is Don Kaufman. Want to make sure that you're tuned in. You hear me all right? You can even turn on a camera if you are so inclined. But feel free to chat in. There's a bit of a Q&A going right now, and I can actually read that here, obviously, in real time. So by all means, and we'll get started here just momentarily. All right, let's get this off and running here. So welcome everybody. Again, I'm going to actually flip on a camera here momentarily. Sorry, I got screens, man, and they're all over. I'm just making sure that we're live. We're live. So welcome everybody. One of the first things, everybody always asks me this question: are we live? Live? Yes, this is live, like happening right now, live. Does that help at all? Because we're actually streaming it right now. Live. In fact, I am actually going to reference the live markets as well. So if you are watching this later on a recording, well, today's May 24th, and we're 2 minutes after 12 noon here. It is a stormy day once again in markets. So sit back, relax. You're actually going to learn quite a bit in today's session. We're going to run through this also at a fairly good clip. The couple things I want you guys to know a little bit today is number one, I may actually execute a couple of live trades in the midst of some of the volatility. Unless you know what you're doing, don't necessarily follow along in here. Okay, I wanted to throw that out. We actually have kind of a no holds barred approach here. You can ask questions. I will answer you. By the way, if you see me looking around a little bit, it's because the screen in front of you with a platform on it, that one's actually directly in front of me. I've got a screen to run a PowerPoint. I've got a screen over here where I'm watching the Q&A. I'm also watching the Nasdaq and the bonds. I got the S&Ps over here. So there's a lot going on the screen right now. We are monitoring a number of significant portfolios as well. And by the way, when I say that we're very much no holds barred, we show you everything. P&L on the day. I can show you every single account that we have in here. This one happens to be an IRA. We also trade on Tastyworks. You'll see everything. Again, I am a big believer that if people are not willing to actually share some of the live execution, some of the live trade with you, then it's all for nothing. Again, I have a multitude, 4 different accounts that I kind of move between, and I'll talk a little bit about P&L though on them. And as I said, this is when I say it's a no holds barred approach. You get to see everything that I'm doing here as I'm doing it. So with that, ask questions as we cruise along here. That's fair game. We're going to go ahead and get started right now. So what you're watching today is specifically about Ultima trades. And when it comes to Ultima trades, it's a high probability income generator. Ultima trades is quite simply put, it's what's working right now. I mean, right now, it's been working really since the onset of COVID. Since the onset of COVID, there were some major monumental shifts in the marketplace. And I'm going to explain to you exactly what Ultima is. If you've actually been to a presentation like this before, well, sit back and enjoy. You could watch this 4 times through because every single one is a little bit different. I've been talking about Ultima now for almost the tune of 2 years once we were onto this trade. And as I said, this is what works now. And it's phenomenal. It's even better in a volatile marketplace than it has been even in the previous, 2021 was strong. In fact, I'll even show you the results from 2021. 2022 is obviously, this is it, man. This is the absolute pivotal environment for the current strategy. It just simply couldn't get better than it presently is for Ultima, unless of course volatility picked up even more. So we're going to talk about exactly what Ultima Trades is, a high probability income generator. Next, it's a risk disclosure. We're not financial advisors, nor are we a broker dealer. I spent 15 years in the brokerage world and I am out of the contest. Listen, this is why you're here. You're going to learn a little bit about what Ultima Trades are and why they're ideal for the current market environment. We're about generating monthly income off of this. You're going to learn a couple of different trading symbols that we use on a daily basis to actually create Ultima Trades. You're going to learn how and where to find edge right now as a retail trader. You know, a lot of this stuff is, oh, this worked back in, this worked back there. Listen, I'm going to show you when I said what works right now. You get to see the portfolio. This is the TheoTheo portfolio. This is actually a spread tracker portfolio. I've got another multitude of portfolios over here on Tastyworks. You get to see, as I said, everything we do, you know, and you get to see it obviously P&L changing in real time. So we'll show you where that edge is. Then we're also going to talk about reaping the benefits of high probability trades, but more importantly, how not to take large losses, and obviously what products make the most viable candidates and what products are going to be a recipe for disaster. So be aware of that. Next in the docket, we provide an indicator to you for attending today's presentation. This is called the Auto Expected Move Indicator. By the way, I mention this particular indicator just incessantly. I do so because it's what we use constantly. And in order to follow along with some of the material that I may cover, I refer to the Auto Expected Move Indicator. Instead of charging you $500 for this indicator, stay with me right into the end of the webcast, and I'll provide you a link to the Auto Expected Move Indicator. It's an indicator that's changed the way that we view markets. It's not about overbought, oversold. It's about efficiency or inefficiency in the marketplace. This happens to be a screenshot of none other than Microsoft. And by the way, as I said, I like to make things dynamic here. Who cares? You know, it's a screenshot. Like this is a live trading application. Here's the Nasdaq. All right, Nasdaq on the year-to-date basis is almost down 30%. Take a quick glance over here at auto expected moves. One of the things you recognize by looking at auto expected moves is if we're inside these three lines, markets are pretty efficient, meaning that they're working. If we start crossing outside of these three lines, like, you know, that week we caught the edge, right? Even last week we kind of caught up to the edge. The one point that you learn from looking at the Nasdaq right now in auto expected move indicators, you're not going to like me saying this, but things haven't really completely broken down yet in the market. They haven't broken down. If they had broken down, you would actually see vicious, hideous breaches of expected move. You'd see something along the lines of, like, let me give you an example. Tesla. You start looking at Tesla. Look how hideous some of the breaches are. That's a breach of expected move. That's a breach of expected move. All right, the previous week, huge breach of expected move. That's a product that is showing degrees of inefficiency, whereas the QQQ has not necessarily done that. In any regard, I wanted to mention that we give you this free indicator. Again, stay with me right until the end of the webcast. It's a $500 value. Anybody that has actually downloaded and checked out this indicator will agree with me on that particular front. Feel free to chat in, because if you've ever seen it, again, you know, we built it here at TheoTrade. It's something we've used for years now, and we feel strongly that everybody should have a copy of it. A few housekeeping items. Listen, this is a skill set. I'm going to run through a tremendous amount of material today, and I'm most definitely, I know we schedule these for like an hour and a half. I'm probably going to go over in time a little bit, but I'm telling you, it's going to be worth your while. Shut the door, turn off Skype chat, kick out the grandkids. Listen, you took the time to be here. This is important. It's really important for this marketplace. Focus on being here. You want to see how you can be effective in a marketplace that feels like a bottomless pit. This is the time. This is the time to do it. Here's a little bit about me. So again, my name is Don Kaufman. If you ever need to get a hold of me after today, and I'm also very adamant about this, like, you know, we don't want this to be, you know, a little song and dance that I put on. Listen, TheoTrade, we have 8 full-time instructors. I happen to be the one of them. I'm also one of the co-founders of TheoTrade. If you ever need to get a hold of me, just go to support@theotrade.com. Now, we all of us here at TheoTrade, we use a common inbox. This is not like, oh, I don't want to give my email address. Go to support@theotrade.com. Just put Don in the title, it'll get to me. It actually automates and goes to me. So just be aware of that. I watched order flow for 15 years, and that's in very large part what has brought me to you today. For those of you that don't know any background on me, here's the kind of the nickel tour. I grew up around traders. I had an uncle that was a market maker back in the 1970s. He founded a trading firm. I just grew up around it. And people ask me, when did you really learn about the business? I have no idea. I remember Thanksgiving from being 8 years old, talking about calls and puts. Like legitimately, like early 1980s, I kind of knew a lot about trading. And I didn't go to school for trading, but 3 weeks out of college, I went to work in Chicago. I was then invited to a small startup firm. About 2 years into my career, I was the ripe old age of 24 years old. I was invited to the startup brokerage firm thinkorswim. I was employee number 13. I went on actually to the executive team. We took the company public in 2007. I then went on in the merger of TD Ameritrade to run education for TD Ameritrade. And at that point, we had about 7 million clients. So kind of my area of expertise, both at thinkorswim and TD Ameritrade, was not only technology and trading oriented, but I actually built the education divisions of roughly both firms. People always ask why I left TD Ameritrade. I had a 5-year lockup clause. So from roughly 2010, when we closed the deal, to 2015, I sat at TD Ameritrade and earned a nice living there, not doing much. But while at TD Ameritrade, one of the coolest things is we got to see everything everybody did. When we talk about watching order flow, most people have no idea what that means. Watching order flow means I got to see everything that you did. There's nothing that we here at TheoTrade don't understand about retail clients, because we got to see everything that you did for umpteen years. And that basically means is we watched order flow, we watched trades, we actually studied trades. We know if you ever sold an iron Condor, what your probability of success was going to be. We knew that if mom and pop learned to do a covered call, that individual is going to be much better off than somebody that just went out and bought stock. It's really interesting stuff. But, we study the trades. We know what works, what doesn't. And a lot of what you're going to learn today is from that knowledge base of what works best for retail traders, okay, over time. And it's again, a very distinct aspect of TheoTrade that a lot of people don't necessarily put into context. We know what works. Okay, the buck stops here. I know who made money and who didn't. I got to look at tens of thousands of accounts. I didn't pull up oh, let's look at Mike's account. That's not the way it worked. We did big data. We would literally say, hey, let's look at a subset of 100,000 accounts. Who makes money? Who doesn't? Okay, and it's good stuff. This is actually me. I still do TD Ameritrade TV. I do NTD TV. I do CNBC from time to time. That's one of the more memorable. It's myself against Kevin O'Leary. By the way, if anybody's interested, I always ask where everybody's joining us from, not to make anybody jealous, but we did move from Arizona. We kind of started and launched TheoTrade in Scottsdale, Arizona. We have subsequently moved in the last year and a half. We now are out of St. Croix in the U.S. Virgin Islands. I am on the island right now. Everybody goes, the internet connection is so good. Let's thank the U.S. military for that, because the second largest internet pipe in the entire world is right here on a 28-mile island. Don't ask questions. Don't ask questions as to why there is an internet pipe the size of the Lincoln Tunnel dumped on here, but the internet connection usually is pretty good. As long as we have power, we have internet here. Anyway, so welcome to the Virgin Islands. Let's get into it. What are Ultima trades? So enough of that. What are Ultima trades? So one of the things that you have to realize, there were some distinct changes in markets following the onset of COVID. One of them has been higher volatility. Higher volatility actually creates significantly more options premium. Everybody here probably kind of knows what volatility is, but I say higher volatility. I'm not much of a VIX kind of a guy, but I'll bring up the VIX, right? I say higher volatility. We're going to open up right now a 5-year chart on VIX. You ready? Okay, there's the onset of COVID. Let's say the onset of COVID is right there. So that's the onset of COVID, yada, yada, yada. One of the things you'll notice in a post-COVID world, there's just higher volatility. Even the baseline for volatility is extreme. I'll just draw on the screen for a second over here. Okay, The lowest volatility's been over the last 2+ years is almost the highest it was, pre-COVID. So higher volatility has actually created, it's a little tragic, but a rougher circumstance for most retail clients. But we've had a lot of volatility. We've had a lot of skew, and the volatility remains at record highs. And this is actually what Ultima happens to be. For those of you that have never heard the term Ultima, okay, and I want to stress this for a moment. Listen, when it comes to Ultima, it doesn't mean ultimate. Like, people look at this and they go, "Oh, that's such a cheesy name. It's the ultimate trade." It's Ultima. It has to do with the volatility, and how we actually make money in this particular marketplace deals with skew and volatility. So here's skew. By the way, when we talk about skew, this is total geek stuff, but I figured I'd throw it up because people really want to know how you make money in the marketplace, and start with this, right? So that's a normal kind of distribution. That's a skewed distribution. That's skewed left, skewed right. Okay. It's great to be able to talk about skew, but what good does that do for you? Listen, when it comes to skew, how to use it to your advantage. So skew provides edge in the sale of out of the money options. By the way, I said the O word. I said options. Listen, I I stress to each and every one of you, there's some people that are just vehemently resistant to ever wanting to learn anything new, and I get it. But in this business, right here, right now, I'll just come right out and say it. If you don't understand that this is never going to be a stock pickers marketplace in the near future, I should say. This is not going to be like, what do I get bullish? What do I get bearish? That's not what we're talking about today. Okay, we're not talking about MACDs and Fibonacci's and Bollinger Bands. Okay, and I cannot stress that, okay, enough. So it's something that I think everybody has to kind of understand, that what we're doing here, what we're doing here today is not, all right, sitting around trying to predict what you think the next move is going to be. Because I'm going to tell you right now, it's going to be a tough business for you for the next, let's say, 3 to 5 years. I think at minimum 3 to 5 years, if you're trying to handicap direction of the marketplace. What's the direction right now? It's down, but is it really down? Because we're just kind of volatile the last couple of days and people are puking up positions. I mean, we may have a major sell-off here unequivocally, but what we're talking about today specifically is the sale of out of the money options. And again, I want you guys to feel comfortable with options. I want you to know that we are going to mitigate the risk, that is, control the risk on the options marketplace. I'm not here to get you into ample risk. I'm here to do the exact opposite. I'm here for you to understand that holding stock in most, uncertain terms, there's the substantial risk. That what we're actually teaching right now is considerably less risk than going out and just trying to find what has hit a bottom. It's going to be a brutal day if you're trying to figure out Beyond Meat, which rallied today, or Zoom, which was up but might sell off, or one of you probably got caught up in the Snapchat debacle. It's brutal out there right now. Okay, back away from all of it. Forget about it all. Listen, a lot of traders are still trying to buy options. You're dead. Okay, premium selling is where it's at right now. I'm going to say it again. Premium selling is where it is at. Look at this. Traders, they've just gone wild. You realize this is actually last Friday's statistics. I just wanted to throw this out because how many people are engaged in the options market? Over 50, that's almost 53 million contracts actually traded. So the average this year has been about close to 41, almost 42 million option contracts every day. On Friday, we actually traded almost 53 million option contracts. Granted, it was an expiration, but it's neither here nor there. One of the things I just want to explain to you is, people talk about it's devastating, it's this, and it's that. Do you not understand? This is the heyday. This is what option geeks like myself, we live for this. And that doesn't make people feel, okay? That doesn't make people feel warm and fuzzy inside. But the reality, okay, of the business right now is this is it, people. This is the time that not only do you want to learn this is the time to trade, okay? And again, as I said, I don't mind showing you results, year-to-date results, everything, This is no holds barred. I even show people like, what a daily net lick looks like over here. Listen, it's gotten wild the last couple of days. I don't mind every single aspect of an account. It's the full Monty here at TheoTrade. So with that, let's talk a little bit about selling options, right? One of the first things, okay? Many people have kind of heard through the grapevine, all right, that selling options is a way to make money. I'm just kind of curious. There's no show of hands or, oh, me. Okay, just yes or no. Have people heard that? Y for yes, N for no. And again, I'm watching the Q&A and I'm watching the chat room here. All right. So how many people have actually heard that before? Okay. That, through the grapevine, selling options is a way to make money. Okay. Well, we'll talk about the risk in a moment. Because most of the stuff that you read, honestly, most of the stuff you read in the business, like if you think about, you open up an account in the last 2 years at like a firm like Robinhood. Robinhood will tell you like, you can't even sell options. You go, what? It depends on the brokerage firm that you have. And that does matter. But if you've experimented with, and some people do, they kind of experiment and they dabbled in selling options. Okay. It's like the very first time you dabbled in options, like, oh, I burned my hand, right? It doesn't exactly lead like a wonderful experience. So I want you to understand selling options unequivocally right now, it's the effective means. Okay. Plain and simple. The volatility is through the roof. This is the time you want to sell options. And the next aspect of that is, but if you don't do it right, you're going to lop off a couple of fingers. And I want you to know that you're just, selling options. Okay, can it be risky? Absolutely. There's definitely risk involved. But what I'm going to do today, I want to separate myth from real risk and fact from fiction. And we're really going to break it down. You make an informed decision based on what I'm telling you, okay, and kind of showing you how to mitigate that risk. And you make an informed decision. Based on predicated on those the reality of what's real and what's not in this business, because again, everybody starts to panic at this point. He's gonna talk about options. Listen, maybe you know nothing about options. That's okay for today's session. It's fine. Newsflash: premium selling can also be done in small accounts. One of the aspects that I want you to understand. Okay, I want you guys to understand this. You don't have to have a lot of capital in your account to sell options. In fact, I'm running a portfolio here. I'm going to hide that one for a second. Okay. And the portfolio I'm running, yeah, I have 100 grand in that account, but the portfolio that I'm running, I'm using $1,000 of margin, and that is in an IRA. This would only tie up $500 of margin, and it's selling premium. Okay. And it's effective. And I just can't stress that enough, because I'm so sick and tired of everybody go, I don't have money for this. You have $2,000 in an account, you can do it. If you have $5,000 in an IRA, you can do this. Don't back away from stuff and say, I can't do it off the bat, because I'm going to tell you right now, you can. So we're going to dive right in. Listen, if you're brand new to this, grasp big concepts, right? If you're experienced, and some of you are like, I'm reading the chat right now in here, we have a pretty good number of people on. I'm reading the chat. If you've got experience, I promise you're going to learn a lot, right? And it's when I say that, like, you're going to learn a lot today, whether you're experienced or whether you have absolutely no experience. There's always, one of the group that has never traded an option before. Anybody here never traded an option? It's okay. Okay. Listen, there's many facets of selling options premium, right? Selling premium, when we talk about like selling options and selling premium, you'll hear me use that terminology interchangeably. Okay, selling premium, credit spreads, short call spreads, short put spreads, delta neutral trading, selling naked, right? It's all the same thing, right? It's all part of premium selling. Selling premium can be used to create, you can create bullish positions, you can create bearish positions, but generally speaking, premium selling is actually construed as what we term market neutral. All right, market neutral means I'm not necessarily picking a direction on there. Okay, so with that, you guys okay? Everybody's, I'm good to go, okay to go. All right. So probability and profitability. Everything you do in this business, okay, in some way, shape, or form, is based on probability. Even when you go out and buy a stock, whether you know this or not, what's the probability of the stock going up $5, down $5, up $10, down $10? You can work that out. okay? But the one aspect is you can create trades with a really high probability of success, but you can still lose money. What I'm saying in this part is very simply this. I've been doing this quite some time. So I started educating for the thinkorswim group all the way back in like 2001. I left the TD Ameritrade group, which was eventually acquired thinkorswim in 2015. So I had about 15 years of experience before we ever built TheoTrade. TheoTrade has now been around for roughly, we're coming into the 7th year. One of the aspects that it still just drives me mad, people, is in sheer respect to the fact that people email us every day and they go, how often are you right? And I go, 90% of the time. That doesn't mean anything. If somebody actually quotes you like, oh, I'm right 90% of the time, it doesn't mean anything, okay? Because you can still lose money. Probability alone does not make you profitable. Markets are always a trade-off. Higher probability may actually equate to more risk, all right? You got to remember that. Markets are trade-off. You could be right 90% of the time, or you can still lose money, right? So where can you find an edge? And the reason I wanted to bring this to your attention is like, that is what people, that's what you're here for. You need to find not just like, you should sell options. Anybody can figure that out. And the weird thing is like, again, people kind of hear that through the grapevine. You should sell options. You should sell options. And they say, well, why don't you do it? They go, well, I tried, but I don't know. And we're going to put all of the pieces of the puzzle together today. Saying that you can sell options, that's not a very helpful statement, okay? What you're here to find out is where specifically you can find edge, okay? And the specifics, the nuts and bolts, what we term here at TheoTrade criteria. What's criteria, okay? It's going from A to Z. It's actually taking you step by step, okay, to how to actually go about not just selling premium, but how do you get into the position? How do you get out of the position? How do you manage it? How do you manage the risk? Okay, all of the above. And that's what we're here for, okay? But first, we're actually going to talk to you about where do you find the edge? So for the very first time today, let's get into it here. Let's actually give you kind of a quick example. So just a real brief and dirty example. Here's a stock, okay? It doesn't matter what stock this is. By the way, I call all fictitious stocks stock, right? Stock. So stock is trading right at 50 bucks. So let's go through a couple examples. Do you own the stock? No. Do you want to own the stock? No, not really. Let me ask you something. Why don't you want to own the stock? Why? Why do you not want to own stock right now? I'm not saying that, don't buy stock ever, but right now, okay? First of all, I think it ties up a lot of capital. I think it ties up a ridiculous amount of capital. I think if you have 5, 10, or even 200 grand in your account, why would you want to buy a stock? It ties up a lot of capital right now, and you're in an extraordinarily volatile situation. So every single day, your $50 stock is a $45 stock, is a $60 stock, is a $30 stock. You're like, oh my, okay? This is gut wrenching. Like, you think I don't realize? Listen, I've seen it all. When I say I've seen it all, I worked in Chicago on the floor, okay, 98, 99, and the beginning of 2000. So I was actually there for the beginning of the end of the Nasdaq. Then I actually worked at thinkorswim in the middle of the 2001 and 2002 crash. Oh, wait, there's more. Yeah, I was there during the financial crisis. There's nothing like, getting on the phone with somebody 65 years old that just lost half their life savings, okay? After actually watching them do it in 2001, they got to do it all over again in 2008. And I'm going to tell you right now, this is the most serious move. This is the most serious move we've seen since the financial crisis. And there's not much that I can handicap to the forward future, but I can handicap this. This crap ain't going away anytime soon, okay? The Fed's not just going to reverse course and say, it's okay, we're all going to be okay, because you're not going to be okay, because if the Fed does that, inflation's going to rage, all right? So you better wake up right now and realize, all right, how much risk is really out there. So I am not going to own the stock. I'm going to go out, and I know some people have no idea what an option is, but let's talk a little bit about it. We're going to sell, okay, the 60 call, and for that 60 call, I'm going to collect exactly a $1 credit. So it's a $1 credit. I'm going to bring that down here. I'm going to sell 60 call, and for that, I'm going to collect $1. credit. And that 60 call is going to be good for 2 months of time. It's 2 months of time. Time out. A lot of people look into this for the first time and they go, I don't get it. What don't you get? Like, I've never traded an option. Okay. So let's talk a little bit about options in general. For those of you that are a little bit experienced. Okay. I already had somebody jump in here and go, too much capital. What did I say, man? Don't worry about the amount of capital. Okay. You can do a trade like that now with negligible capital. You just have to know how to do it and where to do it. It is not going to be capital intensive. So from here on out, if you're thinking about margin, stop. I'm serious, stop. Because I will sit here all day long, okay, and just tear into people because I'm like, hey, wait a second. Because I have an account over here and I can carry all kinds of positions. This is a monstrosity position right here. It's tying up $15,000 of capital. That's a big position too. Big position. And it only ties up 15 grand. So I want you guys to know that, right? So you don't have to, okay? You don't have to tie up capital. By the way, thank you for the clarification over there. Okay, I get a little crazy, Al. I'm very sorry. Anyway, as I said, I read the questions in like real time. So it makes it more exciting for me. I like to do this during the market too. The market's edgy today. So, you know, having a Red Bull is probably not going to help me. It's only going to hurt us. Oh, man. We have a 60 call, but let's go back to the basics. Okay. And for those of you that are experienced, hold on a second. You're probably going to learn something over here. So in options, you can be a buyer or you can be a seller. When I'm buying, palms are towards me. When I'm selling, palms are towards you. So in options, you could be a net buyer or a net seller. So buyers have rights, sellers have obligations. Buyers have rights, sellers have obligations. Let's start with buying the 60 call. So the stock's trading at 50. The stock's trading at 50. You don't own the stock. This is where people opened up Robinhood accounts and they go, stock's trading at 50. Whoops, I apologize. Okay, swing and a miss. I hit my mouse. Anyway, the stock right now is trading at 50 bucks, 50 bucks, 50 bucks, 50 bucks. You think maybe it's going to 60 and you buy a 60 call, but you don't buy a 60 call because you think it's going to 60. You buy a 60 call because you think it's going to 70. And a lot of stocks in 2021, they did that. And a lot of stocks in 2020 did that. They just to the moon. Okay. So you could go out and you could buy this call and the marketplace would just rally huge and people were making a ton of money. Okay. It could happen. But buying a 60 call, I want you to think about this. Buying a 60 call, if you went out right now, you buy a 60 call. 60 call gives you the right to buy the stock at what? 60. Do you have to buy the stock at 60? No, but you have the right to buy the stock at 60. But let's say that the stock went from 50. Do you own the stock? Let's say the stock went from 50 and jumped all the way up here to 70. You go, woohoo! Because what's a 60 call worth with the stock trading at 70? Well, the truth is, you have the right to buy the stock at 60. If you have the right to buy the stock at 60, you could buy the stock at 60. If you could buy the stock at 60, you'd be able to sell it for 70 and you would make at least $10 minus the dollar you paid for the thing. So you'd be up like $9. Nine. By the way, in trading, it's 1, 2, 3, 4, 5. Okay. That's 6, 7, 8, 9. Okay. And obviously like 10. You know, we start actually, it's some hand signals here. Anyway, you go out and buy a 60 call, okay, gives you the right to buy the stock at 60. If the stock goes to 70, you're gold, Jerry, gold. What's the chance of the stock going from 50 to 70? Not good. What's going to happen to you most of the time? Most of the time, this is kind of like what a lot of people, again, I'm not picking on Robinhood. In fact, one of my best friends runs Robinhood now. But if the stock goes from 50 to 70, okay, it's an anomaly. Most of the time, what happens? The stock stays flat. If the stock stays flat, you lose your dollar. If the stock goes down, you lose your dollar. Even if the stock goes up, even if the stock gets to 60, you probably still lose your dollar. So one of the things I'm going to do is I'm going to go out there. And I'm not going to buy the 60 call. I'm going to sell it. Why am I going to sell the 60 call? Okay, but in sheer respect, let's not worry about risk yet. Let's not worry about risk. Okay. Let's go out and sell a 60 call. All of us are going to imagine in our heads we're selling a 60 call. And for selling the 60 call, guess what? I get to get $1. You're like, ooh, yay, he gets $1. Well, what has to happen? Over the next 2 months, the stock has to stay flat. I keep my $1. If the stock goes anywhere down, I keep my $1. Even if the stock goes up to 55, I keep my $1. If the stock goes to 60, I keep my $1. I wet myself, but I keep my $1. The only way I start losing money is if the stock gets above 60. Are we clear? Are we good? okay? And it's $1. And one contract, yes, it'd be $100. Let's not worry about how much capital we're making. We just want to understand. Think about this. Don't worry about everything in context. Conceptual, conceptual, conceptual. What I want you to be able to ascertain this point is by selling a 60 call. What is that trade? It is a very high probability of keeping the dollar. That's all I want you to be able to ascertain right now. Okay. And it's pretty clear. It's cut, it's dry, it's clean. The only thing discernible at this point is that you get to keep $1, and there's a high probability of that. Well, what's the downside? What happens if the stock goes from 50 and jumps to 70? Stock's taken over. You are screwed, but it's rare, but you're in trouble because you don't have any risk management. But I want to exploit that. What happens if the stock goes from 50 to 70? You go, oh, I don't own any stock. You don't own stock. So if the stock, you just sold a 60 call and you're selling it naked, sell 60 call, you sell it naked, stock jumps all the way up to 70. You go, what am I obligated to do? And you go, you're obligated to give somebody stock at 60. But I don't own any stock. Okay, well, you have to go out and buy the stock at 70 to give somebody the stock at 60 because you sold a 60 call. You go, I don't like this. You're okay. You're okay to go. You will lose $10 though if the stock jumped to 70. Here's one of the cool things though. Could you find, just bear with me on this thought. Could you find a stock somewhere that can't just jump? Well, what do you mean it can't jump? You ever heard of an index product? Something like the spiders? The spiders, they're not going to get taken over. Okay, Elon Musk cannot buy the spiders. I don't think so, not yet. He's not buying the entire S&P. Elon Musk can't even buy Apple. Could Apple gap up? Yeah, Apple could gap up. Could gap down though too. The rationale behind this, I think, is critically important because stocks that jump like that can be the death of you. I said, I'm going to teach you what products work here and what products don't. Is everybody okay so far? Okay to go? All right. So when you sell options, every day that passes sees the dwindling of options premium. Okay. As time passes, the options you sold decay exponentially. Now, listen, a lot of people are kind of familiar with options decay, right? People have heard of options decay. In fact, let's just cut to the chase and get right to it here. Option decay. Option decay, they look at this and they go, oh yeah, that's that curve that goes like this. And you buy an option right here. Let's make it a 100 call. You pay $3 for it, and then it drops to $2.80, and then it drops $2, and then you're barfing and it drops to 80 cents, and then it's worth $0. Anybody ever experienced that before? That is options decay at its greatest, all right? So a lot of people experience this. They buy an option for $3, and they buy one for $3, and it's only got like, let's make this one easy. Let's make it has 1 month to go to expiration. So with 1 month, you buy something for $3 and then a few days passes and it's worth $2.80 and you go, I'm okay. And then all of a sudden it drops precipitously another 80 cents. And you're like, well, how come it only lost 20 cents at first? And then it lost 80 cents and then it lost $1.20. And then I just barfed all over the place. Like, why did that happen to me? How many people have ever had this happen to them? Okay. By the way, your feeling is, the first feeling is, from when it drops from $3 to $2.80, you say to yourself, I'm okay. When it drops from $2.80 to $2, you go, I'm in trouble. When it drops to 80 cents, then you turn around and go, it's not even worth selling anymore. And it goes out worthless. Am I speaking to anybody in particular? Because I'm trying. Okay. One of the things, the only thing I really want you to understand in this slide, nobody ever wants to admit that. You people today are no fun. All right. Listen, admitting it is the first step. You can say like, I've done that before, okay? I've seen that movie and it sucks. The one thing I want you to understand about decay, see this decay graph? Don't ever look at it again. You're never gonna look at it again the same way. You're like, what are you talking about? Options, some options do in fact follow that decay, but that is what we term, okay, near money options. That's near money options. This is the decay graph, though, that everybody sees for umpteen years, right? And that's why I threw it in here. I'm actually going to show you now what Ultima really is. And you go, what do you mean? What are you going to show us? Okay. The options really decay like they're supposed to mathematically. All right. It's pretty quiet out there. Everybody okay? Just making sure everybody's good. So moving at a pretty good clip here. Just want to make sure you guys are with me, all right, picking up on it, because now we're actually getting into some real examples, and we're going to take it over to the live market. Oh, it's getting real out there now. I like it. Okay, bring the pain. So more pain, more opportunity right now. All right. No, nobody's answering me. So, okay, still learning. All right, just making sure. Here we go. Now we're actually going to give you a little bit more of a up tempo, example. Okay. This is now $100 stock, and it doesn't. Again, I'm going to take you into an example into a live market momentarily, but it's not essential at this point. Okay, not essential. We're going to look at $100 stock. Okay, and this $100 stock it's good to go. We're going to go out in this case, and we're going to call this stock. Stock is trading right at 100. We're going to go out in this case, and we're going to sell. Ready for this? A 120 call. I'm using a call because calls are just easier initially, and I'm going to collect exactly a $1 credit. And I'm using $1 because it's easy, right? So let's sell. Whoops. I'm going to fix that. Let's go out and let's sell a 120 call. We're going to collect exactly $1 credit. Now I'm going to drive you guys crazy. I'm going to make this one good for 3 months of time. Now, as soon as I throw the 3 months up here, okay. By the way, Donna, I appreciate that. Donna's obviously tuned in a couple times. She's like, the more times I watch, the more I'm starting to pick up. I tell that to people, like, I'm a, third time's usually the charm. Third time's the charm, because I'm always like lacing a little bit more into these presentations every single time, especially during days like this where markets are rocking today. This is going to be some really good examples. I'm going to tell you right now, in about 3 minutes, we're going to be doing examples in the live market, and I'm very likely to execute a couple of trades. This is a good day to do it. It doesn't get much better than this. It's rocking out there. So I'm going to go out now. I'm going to sell a 120 call, and it tortures everybody because I do it like 3 months out, and you go, why? You told me that I could make money every month. You can make money every month, but I'm using an option that's 3 months out. And you go, well, why are you doing that? That's what we're going to get to. This is what the beginning of stages of understanding what Ultima is understanding that we're going to be 3 months out in time. And we're 3 months out in time because I'm going to tell you right now, going further out in time, okay, mitigates some of the risk. When I say mitigates, it lessens our exposure to extraordinary moves. Why does it lessen the exposure? Where's the stock right now? Okay, the stock is trading at $100. Do I own the stock? No. Do I want to own the stock? No, because it ties up $100 a share. I'm just going out and selling a 120 call. I just go sell the 120 call. That is it. Okay. Do I have to sit there for you're like, seriously, you're going to sit there for 3 months to collect $1? No, stop with that. Okay. I'm going to go out there and I'm just going to sell a 120 call. So why am I selling a 120 call? First of all, that little monkey is 20% out of the money. OTM means out of the money. 20% out of the money. I'm so far away from the underlying. Like, this is like watching a football game and you're not even seated in the nosebleed section. Okay. You're seated in the parking lot watching it, okay, streaming on your mobile device, but you're in the parking lot of the football game. Does that make sense? Okay. That's like, it's craziness. Okay. It's absolutely craziness. Or if you're from Wisconsin, it's normal. But, okay, the point being, all the guys I used to trade with are pretty much from Wisconsin. They all talk about like tailgating parties. Like, did you ever actually go to the game? They're like, no. We just stream it into the parking lot. And I'm like, oh, only in Wisconsin. They're like, well, the one thing is it's warmer in the car. So you're in like the nosebleed seats. You're so far out of the money. It's like, could the market get you? It could, but it would be really, really rare. Does that make sense? So what you have to understand about this trade is there is an incredibly high probability of making the dollar. Incredibly high probability, because if the stock stays flat, you keep your buck. If the stock goes anywhere down, you keep your buck. Even if the market goes up huge. I mean, this thing can get to 115, you still keep your dollar. You're 20% out of the money. Like, if it gets all the way to 120, if it gets to 120, you can see it coming from a mile away. You'd be like, oh, look, there it comes. Here it is, here it comes. It's far away. And again, you can still, even if it got to 120, you're still going to make your dollar. So do we understand the context? Okay, that this trade could have like a 95%, okay, probability of making, all right, some money. Like it's super high. Do we understand this? Are we okay? All right. Everybody okay? All right. I'm making sure, because I want to get to just that. So everybody's like looking at this, they go, okay. So let's not do it anymore as a fictitious example. Let's actually take you into live markets, okay? This happens to be the thinkorswim platform. I also use Tastyworks extensively. So by the way, when I say that it's a no holds barred like approach here, okay, we show you everything, every position I've got on. There's Tastyworks. Here's all the positions that I have on. In fact, I'm going to aggregate my accounts. This is in real time right now, okay? And you get to see P&L. Listen, there's days where I'm up, there's days where I'm down, okay? That's, whoops, swing and a miss. It's real time. That's P&L on the day, okay? That's P&L on the day. And I'm up 16 grand, and people always talk about like, how much margin are you holding up? I'm holding up $81,000 total. So when you're tying up 81 grand in stock, you wouldn't be able to make $16,000 tying up $81,000, right? I'm tying up 81 grand, able to make 16 grand off of that. And that's, this is just two accounts, and how much total capital is in the account. I'm not using but a fraction of the capital that I actually have in the accounts, okay? If you're kind of curious, on a year-to-date basis, this is actually in an account, okay, that the account this year had just under 250,000. I try to keep this count right around $250,000. That is year-to-date P&L. You can see what products I made money in, what products I lost money in. You can see everything. Okay, no holds barred approach. I don't care. That's it. And there's, there's good years, there's bad years. The last bad year I had was probably 2017. Was not great. The last 2 years have been, like 2020 was unbelievable. 2021 was even better, and this year has actually started off with an absolute bang because of the volatility. And people should recognize that. It's this is the time to shine. So what I'm going to do now is I'm actually going to go into the trade tab, and I'm going to build a position in the spiders. And I'm going to zoom in over here a little bit closer. I'm going to come exactly 3 months out, just like I said before. And you know what the other thing I'm going to do? I'm going to try to find something trading right at $1. Here it is. Okay, works for me. Okay, so in this example, I'll explain it all in context here as I write it up. I'm going to go out and I'm going to do a trade. Okay, what trade am I going to do? I'm going to go out, okay, and I am going to, in this case, sell the August. Okay, that's an August 19th. And this is a 455 call. And let's say that we sold it for precisely $1.04, and I could sell it for $1.04 right now. So I sell the August 19th 455 call for $1. Stop right there. Okay. Now what am I going to do? You're like, oh, it's 87 days out, man. You're crazy. Why would you ever want to wait 87 days to make a stinking dollar? If I do one contract, it's going to tie up lots of, you got to stop with the margin thing, because I can actually circumnavigate margin. Remember, I spent 15 years in the brokerage world. If there's a rule to be known in this industry, buck pretty much stops here. So I go out and I sell this August 19, 455 call. Okay, just bear with me on this thought. Let's assume that nothing happens in the next, like say 30 days. By the way, how many days are between 87 days and 52 days? You guys tell me, how many days are between 87 days and 52 days, right? So what I want to just give me the first example. I know markets are moving around right now. Okay, how many days are between 87 days and 52 days? Okay, pretty short time frame, isn't it? All right. Okay, so let's just talk about calendar days. So you're just about a month. It's just about a month. That's it. Okay. Neither here nor there. The reason I wanted to bring this up, it's just about a month. What I'm going to do is we see that I've sold a 455, again, a 455 call. And that 455, I was able to collect $1.04. If I just fast forwarded like in time, exactly 1 month, let's look what a 455 call is trading for right now. So after just a mere like 30 days, what's the 455 call trading for? Okay, the answer is, there you go, 31, 32 cents. So, okay, about 30 days from now, I'm going to turn around and I'm going to buy my August 19 455 call, and I'm going to buy it back. I'll just buy it back at the market for 30. I'll even make it 34 cents. Why? I added commissions in to make everybody happy. I added commissions in. What'd you actually make in the trade? Okay. And the answer is close to 70%. Okay. So when people say that it's stupid, why would you ever sell an option 87 days out? They don't get it. The options that we're selling, okay, have a tremendous decay rate. It's actually volatility decay rate as well as a theta decay rate. It's known as Ultima. Okay, this is what Ultima is about. It's about selling like 87-day options, buying them back, for instance, when they have like 55 or 52 days left, and you're still able to make 70% or 60% or even 50%. You can make half the premium in the first couple of days of the trade and never have to hold the thing. Do you realize you'd have to wait another 52 days to make the last 30 cents? Why on anybody on earth would want to do that? You know what most people are doing right now? They just don't get this business. Most people, they sell short-dated options. You sell short-dated options, you're going down. It's not a matter of, no, you are going down if you sell short-dated options. No one can survive right now. There's what we term too much gamma risk. The risk implied in short duration options outweighs any of the credits you can receive. Unequivocal, right? In the longer duration, we have less risk. We go out there, we sell stuff, we buy it back. We go out there, we sell stuff, we buy it back. We make money in 30 days. We don't have to use 30-day options. We can use 80-day options. We can use 115-day options, okay? Why not? Why wouldn't I? You realize I can go way out here. Again, I could be in the nosebleed seats. Right? Here's an option, the same option. These are the 465s. These 465s are trading for $1. What are they going to be trading for, 25, 30 days from now? The decay rates out here are phenomenal, no matter what product, okay? No matter what product you're using. And again, I just cannot stress this enough, right? The key is over here, and somebody was even asking, am I going to be able to do this on your own? Of course, that's the whole idea. The whole idea is so that you can do this on your own. Like, we don't want to sit here and spoon feed you for the rest of your life. If you need to be spoon fed, we trade with you. We do trade alerts. Okay. You need to be able to do this. You need to be able to understand in context of what works and what doesn't. And in this marketplace, 87 days out. And by the way, I'm using Spiders, Spiders is a marquee product. Could I do this in the Nasdaq like the QQQ? Okay. Why not the Nasdaq? Sure. Okay. Let's go into the Nasdaq. Look, I have positions in here. I would never discuss something that I don't have active positions within. And again, all I'm doing right now is intentionally trying to pick something around $1. Okay, let's get crazy. Let's use these 350s. See, these are 350s. I'm just going to write it up here and just scribble it down really quick. So those 350s, these are the 350 calls. And I could sell the 350 calls and I would collect for those. Let's get crazy. Let's say I would collect 95 cents. Like I could sell these right here, right now for 95 cents. Done. By the way, these things would fill for more like 97 cents right now. Okay. What would they be trading for? They're the 350 calls. What would they be trading for like a month from now? Let's go look at them. Just go look at 350 calls like a month from now. Fast forward a month of time. What are they trading for? Boom, there they are. Okay. A month from now, you can turn around, right? And those same 350 calls are trading for, even with commissions and everything, you can buy them back right now for 38 cents. What are you making? It's still north of 50%. Okay. It's the one thing I am adamant about. Okay. Yeah, you can't just understand, like, who cares about like the MACDs and Fibonacci's and the Bollinger Bands and the trade setups and this and that and the other. It does, none of that crap matters right now. Sorry to be so blunt. None of it matters right now. You do understand that nobody has a magic wand that's going to predict direction of this marketplace. Okay, nor direction of any other marketplace. In bull markets, everybody's a genius. In bear markets, everybody seems to suffer, except people that understand premium selling. We've been selling premium now. Really, it got good again since the onset of COVID. I mean, it's always been good, but it got really good since the onset of COVID. Okay, and we've been talking about Ultima for the better part of like 2 years, and people are still, they're slow to catch on. Okay, you got to get on that pony at some point and realize, like, hey, if I don't do something in this marketplace, I'm going to be in trouble. Okay, and that's why I bring this up this way. Now, again, you may have noticed that I'm selling options further out in time. Further out in time, okay, is the equivalency of less risk. Typically, traders sell short-dated options, but that's why people tune into this webcast. That's what criteria is, right? And that's what we do here at TheoTrade. TheoTrade is designed, okay, not to just, spoon feed people trades and so forth, which we do. I mean, we have a trade alert service. I let everybody know that right up front. It's not about spoon feeding the trades, okay? It's about getting you to understand where you can find edge in a marketplace, okay, at any given point in time. And things can change over time. So again, you got to understand this marketplace is absolutely idealistic for premium selling. The criteria here at TheoTrade, and that's the step-by-step, kind of takes you A, B, C, D, E, into these trades, not only gets you into the trade, but then how to manage the trade and more effectively to get out of it, okay? But why we sell options so far out in time, it's all about less risk, okay? Risk mitigation is key. Now, anybody that's sold options before, okay, knows that, these high probability trades, they sound great. In fact, when I bring up an options chain, and I love to come in here and actually bring up another option chain, I'll come into the spiders again. The spiders are just one of those like kind of marquee products. But, you can actually come in here, you can even look at what's turned probability out of the money. Like, look, I can create trades all day long. Like a moment ago, we were talking about what? These 455s. Did you know that selling the 455s has a 94.5% probability? That's not my number. That's right there on thinkorswim. Okay. By the way, it is my number. Built a lot of the models of thinkorswim. So in all fairness, these really are a lot of my models. But if you've never seen these probability calculations, probability and options, they go hand in hand. And I'm stressing to each and every one of you, okay? The probability is right there. So the trade has a 95% probability. We can actually make the probability higher. How? By knowing how to get into it and how to get out of it more appropriately. But anytime you're doing these 90% trades, 10% of the time, the market's going to rip your face off. You go, I don't like it. For those of you that have ever done this before, how many people here have ever sold an iron condor? Just by, yes for iron, okay, yes or no, just a yes or no, Y for yes, N for no. Anybody here ever sold an iron condor? Okay, a lot of people, holy crap, okay? So if you've ever sold an iron condor, I'm gonna give you the livelihood of the iron condor and what people do. First of all, and I don't wanna be disparaging in saying this, iron condors have absolutely no place in this market. You're not going to be able to make money in them. And I traded iron condors for years, way back when. They won't work at this point. There's actually too much implied volatility skew for the iron to work. But for those of you that have sold an iron condor, what an iron condor is, you sell a way out of the money call, and you sell a way out of the money put, then you buy a way out of the money call, and you buy a way out of the money put, and it kind of looks like one of these. Okay, we'd have to like zoom out. Looks like that, the risk graph. So you sell all these out of the money options, and you buy other options to help hedge the options you sold. And what happens to people in the iron condor is they take a class and they pay $500 and they learn to do an iron condor. And the first time they do an iron condor, it's usually in the spiders, and they always make money. See, nobody ever thinks to themselves, oh man, I made money. Of course you made money. The iron condor that you did had a 90% probability. You go, oh, interesting. Okay. By the way, the next month you do an iron condor, you also did it in the SPY. Okay. And now you did, instead of 1 contract. By month number 2, you're going into the spiders and you're doing 5 contracts because you're like, I got like 50 grand in the account, I'll do 5 contracts. Okay, guess what? You made money. So in month number 1, check. Month number 2, check. On month number 3, you actually step up to a product that they talked about in the class. And in the class that you paid $500 for, talked about this thing called the SPX. You do a 1 lot in the SPX. Guess what? Month number 3, check, you made money. By month number 3, you're already like squawking your feathers. You're like, I'm gonna be the next Warren Buffett. So in month number 4, you step into the SPX and you do a 10 contract trade. And the market's like, we got one. And the market, just absolutely annihilates you. Not only does it actually take the profitability of the previous 3 months, but it takes half your account along with it. And you go, what the hell happened? Okay, and you're there in despair and it's a train wreck. Your losses exceed the gains of the previous 3 months. You lose half your account. And people listen to this. And every time I ever tell this story, it's like, how the hell could he know that? Maybe because I got to see your account for 15 years. All right, there's nothing that you're going to say or do that we haven't explored. And I say that in the nicest possible way. The iron condor is take a little, 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 lose a huge amount, take a little, lose a huge amount. And then, by the way, after you go through this, does anybody have that? Anybody ever had that happen to them? Okay, because again, there's nothing you're going to do in this business. It's like, this business is like watching this really, really bad movie and you know exactly how it's going to end. And you're like, lady, don't go in there. Lady, if you go in there, he's going to take off your head with an axe. Sure enough, she goes in there, boom, head's gone. Okay, great. Okay, so after you, by the way, learn to after you learn the iron condor and you pay $500 to go into a class in iron condors, and then you take this enormous loss. By the way, everybody that took the class with you loses on the exact same iron condor because these monkeys just basically pushed everybody into the exact same trades. So you take this huge loss and they go, but wait, there's more. Then they charge you another $500 to take a new class, and the new class teaches you to fix it. I know I can fix it. By the way, you can't fix anything. The very notion of fixing a trade, I want you to think about this in context. Fixing a trade, more capital and more risk, more transaction costs. There's no way around it. If you're fixing a trade, you are adding more risk to an already losing trades. Some fixes may work, but the very notion of fixing a trade is the first thing you learn in this business. First thing you learn in this business is don't chase crappy trades with good capital. Don't chase. Okay, and they go, oh, I never realized I was chasing a bad trade. No. They call it fixing. I saw this one class one time. It was called like morphing your trade, morphing it into an amalgamation of crap. You're adding more risk to an already losing trade and racking up more transaction costs. The very notion of fixing, okay, is exactly what you don't want to do in this business. I can put a butterfly here. I can move a leg there. I can bump a leg here. That crap simply does not work in volatility. You get rid of trades like yesterday's trash. Listen, it's the exact same analogy. You take a car, okay, and you should remember this with every bad trade. I'm serious. Forget about premium selling, every single bad trade. Take a car, drive it off a cliff, and then bring it to a body shop. And what's the body shop going to say to you? They go, what am I going to do with this? It's an amalgamation of garbage. Like, I could fix this, but why would anybody want to? It'd be cheaper for you to go out and buy a new car than it would to be able to fix this car. And they go, no, I can't possibly be wrong. I must fix this car. Does that sound like you trying to fix a trade? Okay. You got to learn to do this the right way. You got to learn to actually sell premium the right way. Okay. And I'm actually going to get into it right now. So now we're going to talk about the correct way of selling options premium. Before I get into this, I want to show you something. Okay. And what I want to show you, this is my present options inventory. Okay. This is present options inventory, P&L real time. Again, I have a multitude of different accounts that in here. We can show you kind of the full Monty. That's as real time as it possibly gets. The hardcore inventory portion of this, when I say inventory, all right, let me isolate to the TheoTheo portfolio. This is actually an inventory. Okay. This is a very, very small position. Okay. Very small position. It collects $200 a day. Okay. And takes almost no directional risk. It's what we call 100 deltas of directional risk, which is just negligible, but it collects $200 a day. So all things being equal, whatever happens to this marketplace, I make $200 today. Okay, you go, but could you could lose. You can lose a little bit directionally, but this position is just meant to bleed markets over time. Okay. And it's just one of the key facets of this business. And this is exactly what I am discussing here in terms of Ultima trades. So now I'm going to talk about selling options premium in a bigger context. I want you to understand, okay, not just how to go out and sell options premium, because let's go look at the market for just one brief and fleeting moment. This is the spiders. Forget about the chart. Like, listen, you can look at a chart all day long. The only thing I want you to rationalize about this chart, okay? If you look on a 1 year, you're like, whoa, we're at the lows over 1 year. No. I want you to open up a 5 year. Is that intimidating? You're like, yes. Want to see even more intimidating? Open up a max chart. Yes. Okay. I mean, you're dangling off the edge of a cliff over here. Life savings are on the line, and people are still questioning. Like, there's no problem with you getting out of portions of your position. I just did an interview yesterday, a TV interview, and they asked me, what would you say to a baby boomer? What would you say to this? Baby boomer, you don't have time. You don't have time to recoup if that market comes back down to 200, if the S&Ps come back down to 3,000. You don't have time, okay? The one reality, and I feel really strongly about this enough that I'm bringing it up on a conversation here, but the reality is you're still up. Like, look at this on a year-to-date basis. And year-to-date, we're down about 18%, but over the last 3 years, you're still up 37%. So if you've been invested in the last 3 years, you're still up. Why would you sit here and just like, oh, I'm just going to take a beating and it's all going to be okay? It's going to be a rough summer for you, right? I mean, I don't want people to get destroyed in the marketplace. And then they're going to turn around. What do I do if I go to cash? Okay. I'm showing you what you do when you go to cash. Okay. You can beat inflation. Anybody can beat inflation. Inflation's easy to beat, but not holding stocks in an inflationary environment where the Fed is literally stepping on your head at this point. It's not okay. You got to do something. So when you look at the spiders and you think to yourself, that's intimidating, you got to think it's also opportunity. Let's go in here and let's discuss the spiders. So the spiders right now, okay, the SPY is trading right around 390. Okay, what we're going to do, this is what we do. We're going to teach you selling options premium. Okay, but right now I'm going to teach you what's called inventory management. We're going to make you an inventory manager. Don't think of it as being complicated. You know what complicated is? Complicated right now is trying to find a stock that doesn't go down in a marketplace that's completely correlated. Complicated right now is not understanding that if the market collapses, Bitcoin's going with it. If the market collapses, they're going to sell gold too. Because everybody looks at, oh, well, I'm going to go into gold. Have you looked at the dollar recently? Dollar straight up. If the dollar is straight up, gold is going to be down. Okay. It's not a good hedge right now. It hasn't been a good hedge historically. Because I'm going to tell you exactly what happened. If the market tanks, the first thing people will do in a margin call is actually sell gold. I learned that in the crash of 08. Okay. I've never been a big gold bug and it has nothing to do with it. But listen, if the market crashes, gold, you're like, I can hold gold. What are you going to do? Hold it in your house and rock back and forth underneath the desk? Spiders are at 390. Okay. This is not complicated. You just have to learn a couple, okay, of minute skills to make yourself a little bit better. I'm going to go out, okay, and I'm going to sell just like I was doing earlier. I'm going to sell, for instance, 455 call, and I'm going to collect $1. Before you know it, I'm probably also going to sell something like 470 call, collect $1. Okay. Consequently, I'm also out here. What's out here? On the put side. This is the put side. I'm going to sell a 280 put. Guess what? 280 put, that thing is going to be gold, Jerry. Thing is going to be going for $2. I'm probably also going to sell, right? Again, we're selling puts, we're selling calls. I'm also going to sell probably a 270 put. Okay, eventually collect like $2, sell another put and sell another put, sell another one up here, sell another one up here. That is what we kind of call inventory. Now stop, don't freak out, because people look at this and they go, that could be complicated. All right. By the way, I have a sit-stand desk. It's time to get up. I'm getting angry. Okay, Don's getting angry. When you're actually looking at this and selling inventory, when I say selling inventory, I'm actually selling calls on one side of the market and selling puts on the other side of the market. Now, time out. What's wrong with this picture? So I go out there, okay, and I'm teaching you to just sell a little inventory here, a little inventory here, just a couple positions, just a few positions, nothing crazy. right? Anybody could figure out how to sell these positions. Anybody could. We'll tell you exactly what options to sell, how far out to sell them, when to buy them back, all of it. Anybody can do that. But what is the inherent problem with this? You go, what about margin? Don't worry about margin. Okay, what's the problem over here? Okay, I'm going to tell you exactly what the problem is. One day you're going to wake up, okay, and the inventory is not going to look good. Listen, I want to make you into, if you will, the Amazon of premium selling. You just want to work through as much inventory as you can over the next year. Put positions on, take them off, put them on, take them off, put them on, take them off. Some inventory goes bad. Most of the inventory goes very well. But one day you could wake up and the market could be from here and could go down here. And this inventory is boom, okay, blown up. That is not good. Okay, you can't put this risk on because the market can rip here. The market could rip here faster than you could ever think. And this is where somebody, and they even came in and they said, hey, listen, this is like unlimited risk. Unlimited. Well, listen, if the market goes to zero, you got more problems than your risk. That's where the one person that's got the gold in their hands are like, see, I knew my gold would pay off. Anyway, the point that I'm trying to make over here is you can't take that kind of risk. It's not right, okay? You have to learn to do this properly. And what we are doing here is we're actually going to teach you to structure this properly. How do you structure it properly? Enter the hedges. So we know one thing, okay? We have this SPY, and the SPY is trading right now at 390. Do I own the spiders? No. Do I want to own the spiders? No. Why don't I want to own the spiders? Because I simply don't want to own the spiders. There's way too much risk in owning a $390 product in the middle of what is transpiring into a bear market, a crash, right? Enter what we term, okay, the hedges. What are the hedges? We have to put hedges on. When do you put hedges on? At all times. Want to know what a hedge is? I'm going to explain what a hedge is. There are 3 predominant hedges that we use, and I'm going to explain these. Okay, there's 1, there's 2, there's 3. And I'm going to write them up here, and then I'm going to explain exactly what they are. The first one, okay, the first one over here is known as a risk twist spread, okay, or RTS. The second one is a VIX vol spread, and the last one is known as a gamma iron. Those are hedges. Well, what's a hedge? Okay, a hedge is a risk reduction, okay, or risk mitigation tool. When do I put the hedges on? Always. Do the hedges cost something? Sometimes. That's okay. What a hedge really is you have to understand, okay? You can't just go out and sell stuff, okay, uninhibited or, unfeathered for the rest of your life. Eventually, the markets are going to move, and you should come to this reality now. Okay, the markets are going to move faster than you're ever going to be able to react. People are going to look at this and they go, "Well, but I could do this." And what are you going to do? You're going to wake up one night. Maybe it's tonight. You're going to wake up one night, and the S&P 500 is going to be down 7% overnight. And you go, "That can happen?" Yeah, actually, they can move 7% now. The new rule is 7%. By the way, they changed the rule after COVID. So you're going to wake up one morning, and the S&P futures can be down 250 points. When the market opens, it's crashed. What do? You already have a hedge on. What are the hedges? A hedge is like a sacrificial lamb. Sacrifice the lamb to the volcano. Every couple of months, you must sacrifice a lamb to the volcano. Why? To the better good of your portfolio. Does it cost something? Listen, it does cost something, but you cannot operate without it. Okay, you can't operate in this business like, you can run yourself in circles for years and not realize, but you're going to have to mitigate risk. The term, the funny thing is hedge fund, okay, hedge funds used to actually use hedges. And then over years, they get a little arrogant. I know where the market's going. We haven't had a down market really, since the flash in the pan in 2020. But, in the onset of COVID, we haven't had a serious decline since the financial crisis. Okay. What you have right now is bunch of millennials running portfolios. And I'm not picking on the millennials. The millennials will be picking on the millennials themselves because you have an entire genre of trade right now that isn't, okay, all that experienced. What you want to understand is this. We are going to go out, okay? And I'm actually going to take you through this conceptually right now. We're going to go out. We're absolutely, for instance, going to sell premium, all right? And I'm going to come all the way out here and I'm going to sell, for instance, the 270 put, and I'm going to collect $2 on it, okay? And I'm going to sell, right, the 280 put, and I'm going to collect, okay, $2 on it. And sooner or later, I'm probably going to sell, right, the 290 put, and I'll collect another $2. And again, this is just some inventory I'm scattering. And I'm actually going to sell, for instance, those 460 calls, collect $1, right? I'm going to sell 470 calls, collect another $1, sell 450 calls, collect $1. That's just 6 trades. And you go, it's a lot. Yeah. But you know what? Okay. That inventory keeps you scattered thin, keeps you nimble. The market could rally huge. The market could sell off huge. But here's one of the first points. The market can't get up here and down here at the same time. So you only have risk on one side or the other. These hedges will help with the risk. Now, let me explain what a hedge is. Okay. What a hedge happens to be, very, very quietly in the backdrop, we're going to pop a hedge right there. And the hedge that we're going to use, the very first hedge we're going to talk about, is known as a VIX vol spread. Okay. What is a VIX vol spread? For those of you that know what the VIX is, let me ask you something. When the market goes down, the VIX typically goes where? When the market goes down, VIX goes where? Boop! It explodes in value. A VIX vol spread is a very, very small position, very small, very inexpensive position. Okay. Why do we actually place it right here? We're just going to teach you how to wind that little VIX spread in here, because if the market does go down in a hurry, the VIX spread, boom, it explodes. It explodes just enough to give you actually comfort. It's like almost like a little parachute, boom, okay, explodes enough to give you time to exit these positions, time to actually pull the positions off, time to reassess risk. It's a risk mitigation device, right? So all of a sudden it explodes in value, covers the risk of the downside. That's what a VIX volatility spread is intent on doing. What do you do to the upside? Well, for the upside, you can use what's termed a gamma iron. A gamma iron is actually a buy-side short-term trade that if the marketplace explodes up, that was a terrible drawing over there. When the marketplace explodes up, it's actually going to catch the edge of the gamma iron before it could ever lose money here. So in effect, what has to happen if the market explodes up, you have to pass through the hedge, which is up here, to actually hit any of the trades that you're short on. We're not out there selling premium naked. What we are doing, though, is using what we term inside hedges. Okay, they're inside the premium. So we know that you're actually selling way out of the money. And when you're selling way out of the money, the only market that can get you is an extraordinary move. We're planning for that. We're totally planning for that. All we're basically doing is creating an options premium, an inventory, if you will. Make yourself an Amazon of the marketplace, especially in high volatility. This isn't just the way to survive. This is the way to thrive in a marketplace right now that is, it's all over the place. You know, and you go, well, do I sell calls now? Do I sell puts? Yes, do them both. Who cares? Okay, this is trading. Okay, you cannot though function in today's market without having some type of a hedge. This is what you want to learn right now. Listen, this is why you want to sell premium. Premium can be sold in small accounts now, even under $5,000. I want to be very, very clear about this because it's like the number one question that comes up, right? First of all, 5K is required to do this in an IRA. You can sell premium, even naked now in an IRA. And you go, my brokerage firm doesn't allow me to do that. Yeah, well, guess what? They changed the rules also in the last 2 years. Some brokerage firms do actually allow you to sell premium in an IRA with as little as $5,000. You can do this with $2,000 though in any margin account. We produce positive decay. You can actually enhance existing positions. So let's say that you still do own Microsoft and you go, I still want to own Microsoft. I love the company. I love what they're doing. sell premium against it, but not like covered calls. We're going to teach you to sell Ultima premium against it. This provides a high probability of success. You do realize that you're selling options that have like a 95% chance of making money. More often than not, what do? You open stuff, you close it. You open it, you close it, you open it, you close it, you open it, you close it. You never have to buy or sell the stock, okay? It's like flying an aircraft. 95% of the time, nothing happens. 5% of the time, you're like, oh man, but you have hedges in place. You have hedges in place. Listen, you could be wrong in market direction though, and still produce profitable trades. Like, I put this down here, like you need this in your life. Like, that's not, being facetious. Like, what are you going to do in this marketplace? Okay. And I'm really questioning that. What are you going to do in this marketplace if not sell premium? Okay. We're going to sit out. You could be a half a decade. You could be at least 5 years before we start to, people are talking about a bottom. We can agree on one thing. You think it's a little early to talk about that? A bottom. Yeah, there's a bottom in place. Okay. Not until the Fed rolls over and dies is there a bottom in place. And when they do that, people are going to lose faith in the Fed. Okay. There's more issues than you just care to even count right now. Okay. You got to come up with a better way. Like if you're a stock picker right now, okay, you cannot function. You can't survive in this marketplace. Okay. You can't survive predicting anything in volatility. That's what the term volatility means. Volatility means it's a free for all. That's what it's about. And that's what, I just try to get this into people's head. You need this in your life. Listen, selling premium can potentially bring in consistent returns. And at the same time, it's actually mitigating or minimizing your risk. And we're going to discuss criteria here in just a moment. Before I do that, though, I'm actually going to give you a few live trading examples. Everybody always asks, like, well, how is this doing and so forth? And okay, so I'm going to give you live trading examples. The first thing, okay, everybody asks, how are you doing this year in terms of premium selling? Okay, the answer is it's going extremely well. So this is an account, right? And by the way, I have a multitude of accounts in here. Okay, I can start with, this is it's a little bit of a bigger account. So if you want to see exactly what's in the account, okay, this is the option buying power right here. So that's my buying power that's left, but I'm already using, like 81,000. So how much is actually in the account? This is the net lick. There's $330,000 in this particular account, okay? And you go, that's not that much. That's because I have another account with, 260 in it, yet another account over here with 100 in it, another account. That's one account. How is it doing on a year-to-date basis? This is profit and losses. I'm up $160,000 in this account, okay? Then I'm actually going to switch to an IRA because somebody inevitably goes, well, yeah, but that's well, this is my IRA. You can see everything. I've only traded a handful of positions. This is a very small IRA. It's up $47,000. Okay, what's the net lick? Okay, the net lick, 80 grand. The IRA was nominal. I only kept this one off, okay, a short time ago. I actually moved a more substantial IRA over to Tastyworks, okay, and just playing around with this one, okay? So you can see P&L swings, you can see everything in it, right? But it's up $47,000 on a year-to-date basis. Again, it's a relatively small IRA, right? Again, as I said, we show everything, no holds barred. What I'm going to show you though, okay, is my entire trading from the beginning of 2021 until present time. Variations of all the following trades can be done with as little as $2,000 in a funded brokerage account. And everything I'm showing you here can be done in retirement accounts. Now, I just want to make a quick point. First of all, these are trade alerts. These are trades that we have actually sent to clients. You can follow every trade. But somebody was asking me earlier, they said, do I have to rely on this forever? No, absolutely not. Okay. If you just want to follow the criteria and build your own trades, that's fine. Okay. But the point that I'm making with this is I wanted to show everything that I did, everything, not, certain trades. I'm showing you, all the trades when it comes to premium selling that I've done since inception of 2021. Okay. All the way until present time. And I'm going to run through this kind of quick. What you're looking at here though, and I'll just give you a quick breakdown. Okay. There's an opening position. This is a closing position. Let's make sure you guys can actually see that. Okay. So when I say this is an opening position, this is an opening position, a closing position. The expiration date, the strike price, it's to call, the opening price, the closing price, and the percentage return. If you look at what this is in here, and when I say what this is, if you look at this, you go, where does that come from? I'll tell you exactly where that comes from. That comes from this account statement right here in thinkorswim. See? To open, to close, to open, to open, to close, to close, to open, to open, to close, to close, to close, to close, to open, to close. You get to see every single trade. But I thought this is a little bit confusing, so I took those trades and I just broke them out here. You guys ready? Yeah, I know we're on slide 34 and there's probably about 150 trades in here, but let's go for it. So this is a 58% return, bond short put. By the way, I do trade some bonds. These are all premium sales, 57% return, 53%, 62% IWM, 76%, 60%, 51%, okay, 49%. I'm just scrolling through trades right now. Scrolling through trades. Okay, IWM, QQQ. Oh, look, there's a loss. Everybody likes to point out a loss in here. He's a loser. It happens. Okay, I'm just scrolling through trade after trade. Bonds, IWM, IWM, SPY, IWM, bonds, IWM. Are you bored yet? Bonds. Okay, bonds, more bonds, IWM. Okay, oh, look, a Mo. Ooh, I was really changing it up there. Bonds, Tesla. Okay, Amazon. So QQQ. All of these, all right, are just coming in right around a what return? About a 50% return, 52%, 50%. Okay, at this point, what I was doing is I was getting everybody used to trading spiders, and then I actually stepped into the S&P options and futures. The reason I did that, they're 5 times the size. So once there was a comfortability with the portfolio, I actually changed the product that we trade. Okay, so we use the ES because the ES trades, if you look at this, it's like $7.25, but that's actually a fairly large trade in respect to the fact that, well, it's a $7 trade, yada, yada, yada. Okay, these are much larger in terms of dollar increments that we're trading. Okay, so we're in the QQQ, ES, bond short call. And again, all I'm doing, okay, I started on slide 34. I'm already on slide 109. Okay, and now I'm going to increase complexity in the trades. This is now called a Christmas tree trade. So rather than going out, okay, and saying like, hey, I'm just going to break up the trades into little chunks, here I'm actually breaking the trade into one large chunk. And this is actually done for an aggregate of a $21 credit, closed for $3 debit. It's an 85% return, okay? But I'm just showing you all the little returns in here, okay? There's another Christmas tree spread for a $22 credit, 92% return, okay? Scrolling through, we're actually into this year already. Those Christmas tree trades really clean things up, okay? Just showing you another huge Christmas tree spread. By the way, this is an unusual one because I hit Christmas tree spread smack in the middle of it. It made a $4,000 profit on one unit in the spiders, which is pretty crazy. Okay, ES, there's ES, 50% return. Okay, I have not taken one hit on a year-to-date basis in this portfolio, not one loss on a year-to-date basis. Here's another Christmas tree trade. This one only made about $1,000 on a one unit. Okay, 62%, 50%, 54%, 51%. By the way, these are pretty much as close as you could possibly get. That's a 51% return, and that is closed on 5/17. I just want to show you every trade that I do in here. Okay, they're just taken from here. Okay, to open, to open, to open, to close, to close, to close, to close, to close. Okay, all of those trades are literally, that's all we did is I just listed them in here. Listen, if you don't have a lot of time, it's not a lot of problem. What you actually just saw in these are actually trade alerts. These are trades that are actually being fired out to you as I'm actually executing them, right? We do have text messaging and we also have push notification, but it's essential. You do have to learn how to do this, right? And every trade that we showed here today was displayed live at TheoTrade. Okay, I don't mean live like I was in real time. We were actually firing the trades out and putting them in a portfolio. The trade results, though, this is not sitting in front of your computer all day long. This is premium selling. You realize you can actually sell premium and use a good till canceled order, even get out of it. So even a fraction of your time is enough to see huge results. There's a great time to learn this stuff. Obviously, okay, in this marketplace, you have got to learn a skill set that's going to be more effective. You've got to learn a skill set that's going to be more effective. Listen, what our members are saying. I wanted to give you something that was a little bit more timely. Want to know what our members are saying? This is actually Craig. Okay, it's from May 5th. And it said, possibly the best day ever for me, Woodman. Okay, this is today. All right, I just took these from a, I used a FXI trade. I got out for 30%, but I got out for 30% in a 2-day window. By the way, I don't mind showing it. And as I said, you go, oh, well, show me the real trade. Okay, yeah, here's the real trade. You can see there's the FXI. That's me exiting for $1.14, $13, $13, $14, $15. And I actually went into an XLE trade, a Caterpillar trade. There's a couple of good opportunities out there in the present market environment. Again, there's the Caterpillar. The FXI trade is now closed. Oh, cool. Well, all of these are our clientele that got out with us. FXI closed out for well. Captain David did better than I did at $1.16. I never filled at $1.16. He did. Just to give you an idea, like when you guys look at this stuff, you go, well, how many people are doing these trades? Okay. I'm going to show you something what I think you guys will find very interesting. How many people are doing the trades that we're doing? You know, because a lot of this, people listen to it for the first time and they're like, whatever, man. Everybody does this. You know, it's a little song and dance to show a couple of trades. Here's the FXI. Look at the strikes. It's the 31.29, 31.29. You ready? For $1.15. You want to see how many people do it? Okay, go ahead, open it up. Open up what's called volume and open interest. Do this on your own trading application. Do it. I'm dead serious. Do it on your own trading application. Do you want to see something crazy? That's us. 4,300 contracts. Now, right now, we have just under 6,000 clientele here at TheoTrade. But to give you an idea of how many people are doing these trades, okay, we are the biggest pretty much out there in terms of an organization that's sending out, trade ideas. No one does this kind of size. I'm dead serious. No one does that kind of size, right? In fact, there was by the way, did it come up as unusual option activity? It may have in here, okay? It may have in here. In fact, there's something else I can show everybody that's pretty interesting that just came out today. See if I can actually find it in here. I did, found it. I'm actually going to show it to you. We're large enough that we just partnered as officially today, TheoTrade partnership with Small Exchange, a boon for retail traders, okay? So this is a PR press release from literally this morning, okay, that we sent out. We actually partnered with a brand new exchange, and we did so because no one moves more size than TheoTrade does at this point on the retail side. And I thought that this would be something that each and every one of you would want to see. So this just hit the PR wire literally today. If you want to read it, we can always copy and paste that over to you. But it's pretty cool to see this kind of contract size. Now the exchanges are even getting behind us on this particular front. What our members are saying, Kevin Burks, absolutely love this freaking website. There's so much here, so many different flavors. Yeah, I can't pull away for more than 15 minutes. I can't get any work done. Guess I shouldn't show that to people. TheoTrade is the best by far. I'll be with them for the rest of my trading career. So some of the characteristics over here, okay? Somebody said, how do you close the FXI trade? Well, we give you the closing order, okay? We absolutely give you the closing order. Characteristics, attributes of selling high probability, premium are undeniable. You're never buying or sell the stock. The risk, we actually teach you to tailor risk to your desired comfort level. You never need to use a stop order. By the way, we don't use stop orders here. Stop orders will be the death of you, especially in the midst of volatility. That is something we learned, obviously, on the brokerage side of things. Okay. Probability of profit is inherently and incredibly high. It's a perfect strategy, to enhance one's stocks portfolio, but it's a great tool for those looking to build returns to an account. Because right now, this is not exactly a good time to go out there and want to buy and hold stock, at least not yet. The new products are going to allow for the sale of options in nearly any account size. Now, you got to learn to build a portfolio of options, which I say, don't let the options portion of this intimidate you. You can do this for minimal credits, minimal risk, but the sale of premium, there's a little bit of a learning curve, okay? And it's akin to a massive power saw. And I've always used this analogy. And the analogy is this, okay? If you wanted to go out and you wanted to cut down a tree, you could use, obviously, a chainsaw. But if you don't know how to use the chainsaw correctly, it can be extraordinarily dangerous. Options and selling premium can be the exact same thing. Options can be the quickest, the fastest, the safest, the easiest way to get where you want to go in the market, okay? and used correctly can be phenomenal, but used incorrectly, you can lop off a couple of fingers. And again, like people, they talk themselves out of this, but everybody can learn to sell premium. And we don't just teach you to do it. We actually do it with you, like meaning that we actually get you into the initial strategies and we send you, messages. If you want to trade the stuff we trade, then fine. If you don't, then we get it. Okay. Some people come here for education. Some people come here for trade ideas. Okay. Either one's fine. But when you sell premium, all right, again, don't let that options portion of it intimidate you, even if you have no experience. But the one reality of this market, you're going to need strategies, okay, for the foreseeable market future. And you need this strategy for the foreseeable market future. And we can show you how and when to do it in a matter of a couple of hours. And it does take a couple of hours. But the key point over here is that it's not about selling premium. It's about the detailed recipe, okay, for Ultima premium selling. Okay. It's literally, when I say that, you would not want to bake a cake without a recipe. So why did people trade without one? And you got to be, prepared for today's marketplace. You don't have to freak out and be scared. All right. This is what you need to know to successfully sell premium for a living. You have to know what underlying stocks or indices make the best Ultima premium selling candidates. Okay. Now we talked about a couple of stocks in here. Listen, I don't mind telling people, like, look, what do I trade? I trade stuff like SPY. And you go, can it handle the volume? Yes. I trade stuff like ES. Can it handle the volume? Not a problem at all. I trade stuff like IWM. Can it handle the volume? Of course it can. That's why I'm trading them. I'm trading some of the most liquid products, okay, on the planet, because we are at the point now, TheoTrade's at the point, we're large enough to actually move markets. All right. I don't mind that. I actually take that as like, wow, that's spectacular. We never thought, when we set out to build TheoTrade in 2015, we launched it in 2016. We never thought to ourselves, like, one day we're going to send out a text message and it can move the entire marketplace. It wasn't our intent. Okay. We go out there and we do products only that can absorb easily this kind of liquidity. Right. So we'll give you the exact candidates in there. And it's important. Like, you don't want to run out and do this inside of Tesla. Okay. You don't want to run out and do this in Tesla. Next, what volatility should I seek out? So this is critical. Too much volatility and you're dead. You got to be very careful. Too little volatility and you're dead. Like, what would be a bad thing to trade? Walmart. Walmart to be the death of you. You go, why? What's wrong with Walmart? Too little volatility with just as much risk as everything else. Have you looked at Walmart lately? I think the Walton family lost $22 billion last week. That's not a joke, right? That was they'll be okay, but it was like $22 billion in net worth last week. Too little volatility, you're dead. Too much volatility, you're dead. You have to actually get into the sweet spot of volatility, which is exactly what our criteria does. What options expiration do I select? You guys are going to love this. I don't know if people realize this, but the SPX, okay, and by the way, I do not suggest anybody trade this unless you're wildly experienced. The SPX now has dailies. They have Monday, Tuesday, Wednesday, Thursday, Friday expirations. Every day is expiration day now. Look at all these expirations in here. It's ridiculous. Did you know that you have to zero in on the perfect expiration? So we're going to tell you exactly what expiration to select. What should be the delta of the option I sell? Meaning that, which option do you sell? You have to, like, first of all, you got to find the right product. Let's say it's the spiders. Then you got to find, after that, were the spiders doing anything extraordinary? The volatility has to be correct. And if the volatility is correct, fantastic. Then you have to pick the right expiration cycle. Should I go out 30 days, 60 days, 90 days, 115 days, 200 days? Like, if more time is good, maybe I should go out further in time, right? Then we got to go a little bit further. From there, what actual options should I sell? Do I sell a call? Do I sell a put? What options do I buy against my position? Okay. How do I actually build a position? When I talk about how to build a position, I'm asking the question like, hey, it looks at a distribution curve. I sell a couple here, sell a couple here. Where do I lay the hedge? Okay. And this is the stuff that we teach. And again, it's position structure. Okay. Do I need a large amount of capital in my account to do this? No, you don't need a huge amount of money in your account to do this. What's the right amount of risk for you? Based on your account size, we can actually help you in justifying how much risk to take, okay, for the account size. Now, listen, people are going to come here with a $2,500 account. Other people are going to have a $250,000 account. And other people are going to have 2.5 million. And I'm going to tell you, it's a sliding scale. Like when you have 2.5 million, things are a little different than when you have $2,500 in terms of risk. And we actually build all of that into some of the classwork here at TheoTrade. What are the percentage returns supposed to be? I'll give you that one. It's 50%. We're trying to make 50%. So you just bang out the trades, make 50%, 50%, 50%. The second you make 50%, boom, on. You just got to keep moving on. How do I protect myself from market crashes? VIX volatility spreads, okay? VIX volatility spreads, risk twist spreads. I have a new one too, okay? There's actually a new one called an IPS, which is an inflection point spread. Talk about that in just a moment, okay? Because I'll tell you what do we actually do here at TheoTrade? What do we do here at TheoTrade? We create recipes in trading. Trading is all about answering the what ifs. What might be a good stock or ETF candidate to sell premium, the correct option expiration cycle? How much capital do you commit to generating premium? What strike price options do you sell? Which options do you buy? How can I actually limit my risk? We have those answers. We build recipes with definitive criteria. Okay. By the way, definitive criteria is not enough. It's a checklist. We actually build definitive checklists that get in, okay, for each unique variable and each unique strategy that you're going to encounter. And when I say about checklists, what I mean by that is the whole idea of criteria and the whole idea of a checklist here at TheoTrade is it's like a pre-flight, just like you would be if you were a 737 pilot. Before you actually get into that aircraft and take off, every pilot and crew, they have very definitive checklists. They don't just hop in the aircraft, turn a little key, throttle up, we're going. Okay. They go through highly evolved checklists. And that checklist is designed to make sure that, boom, we have the right volatility. Boom, we have the right expiration cycle. Boom, we have the right risk in here. Okay, what's the contract size? Do I have the hedge in place? Do I have this? After you actually work through the checklist, which is not crazy long because the first couple of times you go through it, it takes time. After that, it becomes second nature. After you do that, then you're actually in flight. The trade is actually on. We even teach you how to execute the trade, which means send it off to the brokerage firm. But after that, then the checklist goes into each unique variable we're going to encounter. What if the market goes up? What if the market goes down? What if we crash and burn? What if? That is what criteria here at TheoTrade does. TheoTrade is the answer to your questions. We'll give you the right probability for the trade. How many option contracts, the account size? Okay, when do you close your premium sell? What if we sell off big? Do I bail out of the trade? What if we rally massively? Can I fix a losing position? It's about how, when, why, at what price. And I'm telling you right now, that is just the beginning of the variables that you're going to face, okay, when selling Ultima Premium for a living. Listen, you can read about what selling Ultima Premium is, right? The funny thing is most people probably have already built a few trades, okay? Right now, I'm going to tell you something. You can Google it. You can actually Google selling Ultima Premium. 10,000 pages will come up on Google about selling option premium. None of them have the criteria, okay? None of them have the criteria. What we do here, right, is build a recipe for success. 20 plus years of trading experience. By the way, that's just me. And TheoTrade is not just the Don Kaufman show, okay? There are 8 full-time instructors here at TheoTrade. Most of us actually come from the thinkorswim TD Ameritrade background. We had access to client order flow for 15 years. So the reason I always mention that, okay, nothing is left to the imagination. We've seen everything that's going to happen in this business, okay, to client order flow. We know when you hit confirm and send, what happens. We know where people get themselves into trouble. Yeah, the market always moves in some crazy environment or interest rates are going to change, okay? But retail clients, they haven't changed. We have viewed and studied millions of accounts. We know what works and what doesn't. We ran education for 15 years at a firm with the largest options order flow in the entire industry. And again, that was thinkorswim and TD Ameritrade, all right? You're going to learn the criteria as your recipe for success. And we spent literally years fine-tuning this trade setup, which is Ultima, and this criteria. And when you approach the section on criteria, you follow the steps to build a trade. We built a full-blown 5-hour class on it. And before everybody, they shut down as soon as I threw, it's $500. It's not $500. It's not $500. They already took that away. We'll worry about that in a moment. We have got to take you through a course to understand the logic, okay, and the criteria before you can follow our trades. You can follow our trade alerts if you so choose, okay? We provide you trade ideas, pretty consistently trade ideas, all right? Or you can generate your own trade ideas. Either or, you still have to go through the coursework. And you go, if you don't spend 5 hours going through it, you're going to get these trade ideas. You'd be like, how do I do this? What do I do? What am I actually constructing over here? And it's important. It's really important. We built a course. I happen to be the trade instructor for it. It is a 5-hour course. It is archived. It is available immediately. Okay. And we do that because, well, first of all, we do these courses and we film them live just like this. Then we clean them up. We get it ready for streaming. By the way, we stream just like you would stream, none other than something like a Netflix. Okay. We even have a mobile device. So we have, when I say mobile device, we have TheoTrade mobile. I'm actually going to bring it up over here. Come on. Okay. So we even have TheoTrade mobile. Why do we have TheoTrade mobile? Okay. Because you're not always sitting in front of your computer screen all day long. So you can receive a text alert, okay, on your mobile device. You can also receive push notification on a mobile device if you're not in the United States, and you can actually hop right on the mobile device and actually trade it. But you can also watch the courses on your mobile device. The class slide deck that includes entry and exit criteria is available immediately, okay? Now, time out. We don't just stop there. I just want you guys to understand one aspect. TheoTrade is not just a class that you take for $500. And again, it's not $500. I am very aware. Again, I've watched education firms for umpteen years. For 20 years, I've watched education firms. Most education firms sell you a class for $500. Then you have to buy an indicator for $500 that goes with the class. Before you know it, you got to buy a new class for $500 and another indicator for $500. It's just relentless. Okay. I'm going to make this very clear. We don't do that. We don't sell indicators. We don't do anything like that. Trade alerts are part of this. When I say trade alerts are part of this, okay, what we do at TheoTrade, and I make this unambiguous as possible, we give you everything you're going to need, okay? Everything you're going to need to succeed in this business, okay? We provide education. We provide trade ideas, okay? So we give you the education and the background knowledge from A to Z. Like if you know nothing about this business, okay, we will get you ramped up. We will get you going. The second aspect is we will provide you trade ideas, meaning that you get to see everything that we're doing and you get to see it in real time, okay? The third thing we do, email support forever, okay? Just email us, whatever, okay? When I say as long as you're a client of TheoTrade, you get email support at TheoTrade. And that means you can actually come to us with your trade ideas and bounce ideas off of us. I urge you to do that, okay? I urge you to do that. Why? For what you pay here, just to be able to bounce an idea off of this. Look what the marketplace is doing to people right now. Do you want somebody to be able to talk to you? You can't pick up a phone and call Charles Schwab anymore. Talk to Chuck, okay? Chuck has 24 million clients right now. It's ridiculous, right? Not talking to anybody. Chuck is gone, baby. Chuck is gone. We are, really picking that up and running with that ball because, hey, we actually give you the email. So there's nothing left to the imagination. We give you the education, we give you the support, and we give you the trade ideas. What else do you need? And I'm going to show you everything that's included here. First, before I go any further, let me give you what is in the Ultima course, and then I'll explain a little bit about what TheoTrade is, okay? And a very discounted price, specifically for those of you that are tuned in live right now, okay? First of all, the Ultima Income Generator course, you're going to learn how to build a portfolio of high probability, okay, options that generates very consistent returns, regardless of starting capital or experience. You'll get the detailed entry and exit criteria. That is what even experienced traders come here for, okay? You're going to discover option Greeks and learn how to manage your positions through one easy number. My favorite portion of the class is you're going to learn to use a risk array in this particular course. It'll let you visualize, okay, the forward future of risk, okay? You're going to learn how to properly allocate in a way that actually reduces your risk and allows you to minimize risk of the portfolio. Discover risk mitigation techniques to handle and hedge even the most extreme market environments. You're never going to be caught off guard. And you're going to learn how to sell premium in small accounts retirement accounts with innovative new trading vehicles that have never been available before. That is the curriculum for Ultima, okay? In addition to Ultima, we're also giving you the inflection point spreads course. Inflection point spreads is brand new. And what inflection point spreads does, and I want to differentiate with it, okay? When I talked earlier, I was talking about doing trades like what's called like a VIX vol spread. The inflection point spread, okay, negates the use of the VIX vol spread. It actually places the hedge and the sale of options all in one easy lump sum position. So basically, it compacts the trade into one lump sum. It is a brand new course. It's a 3-hour course. It's archived. It is ready to go. When I say it's ready to go, you can stream it right now. Okay. In fact, what I would suggest is you can watch the Ultima class and then just watch the inflection point spreads class right after. It's the best 8 hours you ever spent in your life. And I don't mind telling people it's going to be worth it. It's going to be worth the 8 hours. If you want to learn something new, okay, you will want to see this. Okay. And again, don't worry about margin. I will talk about margin in here. So inflection point spread, you're going to learn to sell premium and hedge risk in one transaction. Very high probability, okay, trade. Discover how to hedge existing positions, even in the most extreme environment. Market can be in the middle of a downward crash. You can hedge off risk like that. The detailed entry and exit criteria for inflection point spreads to keep risk at a minimum, all right? Learn to analyze the inflection point spreads so you're never going to be caught off guard. And you're going to find how many inflection point spreads can you safely allocate for your account size, okay? There's a money back guarantee with what we do here at TheoTrade. TheoTrade is designed initially as a 90-day, okay? 90 days. Anytime in the first 90 days, if you want, get a full refund. Hey, I don't mind sharing this with you today because I'm throwing this up here. It's $297. How long is it good for? It's $297 for 3 months, okay? But there's a full money back guarantee. By the way, anytime in the next 90 days, you don't have to give us a song and dance. You do not call us. Don't call us. I read some negative thing today and I tried to call you and listen, don't even bother calling us. Somebody sent us an email and said, I tried to call you, okay? Calling us during the middle of the trading day in some of the hottest volatility, okay? We will get back to you almost instantaneously on email. You know, one person can answer a phone. 2 people can answer 2 phones. Email, okay, we can get back to you just lightning fast. But here's what I'm trying to point out over here. You don't have to give us any song and dance. Go to email support@theotrade.com at any point in the next 3 months. If you're not satisfied, get your $300 back. That's it. Okay. There's no if, and, or, but about it. There's no excuses. There's no stipulations to a money back guarantee. We charge $300 for 3 months. Why do we do it? Well, we have right now just about 6,000 clientele. By the way, it is not a membership and that is not an introductory price. Okay. We're $300 for 3 months and there's a money back guarantee. That's why there's no risk. It becomes like a riskless trade. Follow me right now to theotrade.com/SKU. And in fact, I'll even pop it up here. It's theotrade.com. There are 30 riskless spots today. Let me actually pop up the address over here. When I say theotrade.com/SKU, it's S as in Sam, K as in kick, E as in echo, W, theotrade.com/SKU. Okay. The reason I'm actually taking you over here, by the way, we're there to answer questions for you, but the reason I'm taking you over here, if you click right now, it's $297 today. Click add to cart. One of the aspects, I think it's essential that you see in here, okay? Put your phone number in there. When you do put your phone number in there, it automatically enrolls you for text messaging. Please don't worry about, like, you're not going to get bombarded with text messages. We send a handful in a week. 3 to 5 text messages in a week. It's pretty heavy. Like, premium selling is not like all full on. Okay. You know, it's not like, oh, we're in, we're out, we're in, we're out, we're in, we're out. This is not day trading, right? We're just going out there and we sell some premium, we get back, we get hedged. Okay. Wait for the cavalry. Look, it's $297, or you can do 2 payments of $149. We don't care. And again, there's, you know, a full refund anytime in the first 90 days, and you still get to see everything. Like there's nothing I can do about that. Like you still get to see everything in here. And we'll show you TheoTrade in just a moment. When I say, oh, we'll show you TheoTrade, okay, here, this is TheoTrade. This is TheoTrade. What does that mean? Okay, you're actually looking at our live site right now. And this is actually Brandon Chapman streaming live, okay? And this is actually a chat room where you get to talk to all the other traders, okay? You get to see trades that they're doing, right? Everything, okay? Load some earlier messages. So it's all in here, okay? Everything. You get to see, again, kind of the full Monty in there, all the different portfolios. If you go to theotrade.com/SKU, okay, you can enroll right now for it. And then I'll come back around. I'm going to explain every aspect of TheoTrade, and then I'm going to answer some questions. Everybody, though, feel free to enroll for it. And if you have questions, just come in here. By the way, Bruce was already asking about push notifications. Yeah, absolutely. We do push notifications. Okay. And again, like, I want everybody to understand that for $300, sorry, this is the small exchange thing. For $300, like, listen, okay, we want people, and I always say this, like, we want people that want to be here. We want people that want to be here. And I know that people just want to be spoon-fed trades and stuff, and we do that, but we still, like, we want you to be involved in markets. Okay. That's what we do. You go, how can you guys do that for all that for $300 a month or $300 for 3 months? And the answer is because we realize that no one does what we do. You could spend $30,000 on a market education and it will pale in comparison to what we do for $300 for 3 months. It would just, you can't compare. We even have a professor of finance on our crew, and I'll actually show you a little bit more about TheoTrade as we go along in here, but you get access to everything that we do. We don't hold anything back, okay? And that's critical. And by the way, I wanted to throw this in here, what our members are saying. This comes May 18th. This is about as recent as it gets. This comes from Marianne, okay? Watching history with this stock market, okay? Because all of TheoTrade teachers closed out my entire 401k to cash 5 months ago. Best decision for me, okay? And this is actually me, by the way. I'm TheoTrade. I'm admin in the chat room. So this is Marianne in the chat room. She closed out of her entire 401k 5 months ago. Okay. And I said to her, I said, we've saved Marianne a lifetime of work. And she came back and said, yes, so grateful to you. Okay. She said, I'm 72 years old. Don't have time to recover from this down market. And I know that everybody appreciates, and again, you see the time sequence, everything here is just May 18th. And I wanted to include that because the one thing you guys have to understand about TheoTrade, okay, the one thing that you have to understand, okay, we tailor from novice to the extreme, okay, but we wish that we got a hold of everybody earlier in the year. We don't shy away from saying, like, this is what you should do in this business. Most of us actually carried licenses. I've had my series 3, my series 4, my series 7, my series 66, which is a 63 and a 65 combined. I was a series 24, which is a principal broker dealer. Okay, you name it. And I've had all the licenses out there. We know how to answer questions for clientele. We won't shy away from that, and it's critically important. So here's all the bonuses that come with TheoTrade. First of all, we go beyond a class or indicator. We understand that people want everything to invest at one place and at one price, okay? So the first thing, we have a quick start beginner's guide video, right? What does that actually amount to? Here, so this is TheoTrade, come to start here. If you're a novice, start here, options 101, 201, 301, 401. Even if you're experienced, order execution part 1, 2, and 3, you guys will love what we're doing in here, okay? Seriously, okay? It is worth its weight in gold. Go through the options beginner series, okay? That's a quick start beginner's guide. So that's the first bonus. Bonus number 2, we give you access to every course that we've done since inception of TheoTrade. Every course. What does that look like? I mean, this is just a smattering of some of the courses. How to collect income being short, volatility back spreads, Ultima, obviously, guide to small account growth with in-out spreads. If you want to see what classes look like, that's the start here menu, but here's the classes. We have classes that are done in options, option newbies, technical analysis, bonds and futures, stock, day trading, hedging, trend trading, pairs, okay, mindset, which is, we have an in-house psychologist. But if you go to the options courses, okay, Z spreads, inflection point spreads, income accelerator, Ultima. Okay, Ultima, inflection point, these are the classes that I'm suggesting, but you get access. Look, you get access to every single class we've done. Just to make a point, this inflection point spread class. Oh, here, let's click on it. You just click on it, okay? Just to show you how it works, okay? That class is live, right? It's playing right now. You can download the slide deck right here. It's broken into a couple of pieces, right? We even do a Q&A to actually show you every detail, okay? Nothing is left to the imagination, but you get access to every single course since inception of TheoTrade. Like, we built what looks like a Netflix for traders, right? These are all the different courses, and selling premium and covered calls and essential skills for consistency. It's all part of it, okay? Bonus number 3, we give you access to our chat room. You realize there's services out there, they charge $100 a month, and then they charge you $300 a month to access a chat room. We give you the chat room, okay? When I say they give you the chat room, okay, this is the chat room. Like this, okay? This is live, all right? When I say it's live, wait, are we in the seam right now? Yeah, we're actually between 2 instructors. So Tony Rago is coming on live right now, okay? So you'll see this, it says off air, okay? Here comes Tony Rago. Look at that timing, okay? These guys are to the second, they're traders, okay? We don't miss a beat. So this is Tony Rago. He's coming on live to trade Nasdaq futures, right? And you'll see everybody start talking about Rago in here. Thanks, Brandon, because Brandon was the previous instructor. So Tony Rago is coming back live, right now. So just getting a quick feel for what goes on in our chat room. We broadcast 6.5 hours a day. We answer questions in real time. We have 5 different portfolios. We have daily coaching sessions. It's like another $1,000 support, okay? By the way, here's the instructor crew. We answer emails. You can email any of us and we will answer them, including myself. So we have Jeff Bierman, Matt Williamson, Corey Rosenblum, Brandon Chapman, okay? Steve Miller, Tony Rago, Blake Young, all right? Jeff Bierman was with us, obviously, at TD Ameritrade. He built most of the studies on the thinkorswim charts. If you actually have ever been on thinkorswim charts, they came out of his head. You go, how'd you guys get them? Bierman actually worked in my group, okay? Brandon Chapman actually worked in our education group, all right? Blake Young worked in our education group. So it's again, I mean, most of them have CMT designations as well. So CMT is not just Brandon, it's also Corey and Jeff Bierman. And Jeff, he also moonlights with us, but he's a professor of finance at DePaul in Chicago, okay? It's kind of cool. All right, this is actually some of the instructor crew. There's even Steve Miller on our crew, who's kind of our in-house psychologist. Access to all our proprietary indicators and scans. Anything that we build, okay, we give you immediate access to. Quantix, we're going to give you auto expected move, gravity points. By the way, we have a new gravity point right now. For those of you that speak Trader Geek, all right, when I say we have a new gravity point, we picked up on a level in the S&Ps. Okay, I'm going to tell you right now exactly what the level is. If you don't think this stuff's important, look at that level. Okay, that's a gravity point. What it basically means, well, we cover that in some of the class work. One of the most critical levels in the entire marketplace right now. Okay, you can pretty much handicap, we're coming home, okay, and home is 39.31 inside of the S&Ps. We give you all that stuff, all right? So bonus number 4, you get to see our portfolio, TheoTheo live portfolio, no holds barred. This is what I was showing today. That's actually my portfolio where I'm trading. We also, in addition to the bigger portfolio, we have a TheoTheo small portfolio. If you have a $2,000 account, a $5,000 account, you get to follow the portfolios. The small account happens right here, okay, on Tastyworks. The bigger account, okay, I do on thinkorswim. Why? Just to create some differentiation. I didn't want to use the same brokerage firm, okay, for 2 different portfolios. This is actually the bigger portfolio, okay, and then the smaller portfolio. The Theo small portfolio, it's killing it this year, all right? We don't do nearly as many trades. It's designed for, again, $2,000 to $5,000 accounts, but it's phenomenal. The portfolios, they're just copy and paste. This is it. It's just a spreadsheet. You copy and paste. By the way, if you can't watch throughout the course of the week, we give you update videos. The update video, it's 12 minutes out on every Friday. So time out for a second. You're seeing all this. You're like, oh, it's overwhelming. Just stop. It's $300, okay, for 3 months. You get trade alerts sent to you on text message, right? We also give you an update video each week to explain why I made the moves, how I made the moves, and everything. It's inside of 12 minutes. Okay, just understand, like, you don't have to watch throughout the course of the week. You can trade throughout the course of the week, and then that update video kind of recaps everything. Bonus 5, technical analysis toolkit. Okay, bonus 6, day trading treasure chest. This is all part of it. Okay, I mean, look, there's literally 21 other technical analysis classes. Okay, we have 11 day trading classes in bonus number 6, bonus 7. This is one I always say, write this down. The 5 essential building blocks to successful trading. Steve Miller. People always kind of like, they forget about this one. If you have experience, this is the most essential class you're ever going to take. I don't usually sit here and like, hey, preach about somebody else's class, but Steve Miller, this guy's forgotten more about risk management than most of us will ever know. Okay, he's in his 70s now. He finally retired from Chicago to Florida. In his retirement, okay, he's actually building this course structure here at TheoTrade. That guy's absolutely phenomenal. And we just talked to him like a week ago. I said, what are you planning on doing? He goes, planning on trading. I love it. Okay, it's like, what am I going to do? Retire? He goes, I retired years ago. He goes, I just sit here and trade. Put a microphone in front of my face, and he goes, it works for me. So you guys will love this. Bonus number 8, quick start guide to Ultima. So the 8th bonus here is actually like a quick start guide. You want to get into premium selling like now, today. We built actually a little bit of like a Cliff Notes version, specifically for those of you that have experience that just want that quick start guide. Again, one of our members are saying, thank you. Reply is very much appreciated. TheoTrade is the first educational trading service that I'm actually making a profit with, and one which I can see a pathway to retirement. All right, we include everything you're going to need to invest in trade. We give you classes, we give you coaching, we give you email access to the instructors, live trading room, live trades, right? Indicators and scans, mobile access. It's everything you're going to need to succeed. We've literally built the Netflix for traders. It's $297 for 3 months. Now, I've already mentioned this, but I want to reiterate it again. Okay, this is not an introductory price. Everybody always asks that. It's not an introductory price. After 3 months, okay, you will not be auto renewed or auto billed. After 3 months, if you want to do it again, you tell us, we bill you. Okay, you have to tell us to do it again. It includes everything, everything we've talked about, new monthly classes, inflection points, spreads. By the way, there's more classes coming. There's always more classes coming. 59 proprietary indication scans, text and push notification, daily coaching sessions. Just go to TheoTrade.com/SKU. I'll reiterate, there's a 90-day money back guarantee. Okay, no questions asked. There's no stipulations. By the way, you don't have to do a little dance. You don't have to make a little love. By the way, William was just saying, what's the cost after 3 months? It's $297. We don't change it. It's not an introductory price. Okay, I don't want you guys to think you're like, oh, you're being like led down the rabbit hole over here, because not. It's $297. And if you want to do it again, what's funny is once in a while somebody will leave. They always come back. Okay, because there's nothing else out there. Again, you could spend $30,000 on education, and it will pale in comparison. Once you see what we can do here at TheoTrade, and we will stop at nothing. Like, this is the place to go if you really want to learn this business, is the bottom line. There's no excuses, no questions, no commentary. If you need your money back, get your money back. We want to make sure that, okay, even if you leave, we want you to part on good terms. By the way, if you receive a refund, you get to keep bonus number 1 on us. If you forgot what bonus number 1 is, it's the quick start guide. So you get to keep all of these videos on us, even if you get a refund. Again, it's just a riskless trade altogether. And you get to view as many classes as you want. I know some people try to game the system and say, I'm going to view all these classes and then I'm going to get a refund. Okay, that's fine. But, most people don't do that, because if you view the classes and you go, holy crap, they actually know what they're doing over here. Okay, listen, get into TheoTrade now. There's 30 spots on today's riskless trade deal. All right, listen, it is a matter of trade size. We do trade live. We have unlimited email mentoring. So we do kind of, incrementally limit the number of people coming in. $297 riskless offer has never been available for it with Ultima, inflection point, and it's a no stipulation money back guarantee. Okay, so I reiterate, the site is TheoTrade.com/SKU. Again, it's S as in Sam, K as in kick, E as in echo, W, TheoTrade.com/SKU. Right? I'm going to answer some general questions and some other questions here. This is actually from March 30th. Closed my year-to-date profit from Ultima trades is paid for my yearly TheoTrade subscription. All right, everything Ultima, quick start guide. Okay, 100 trading classes, access to our chat room, the TheoTheo live portfolio and the small portfolio, technical analysis toolkit, the day trading treasure chest, the mindset mastery, the quick start guide to Ultima trades. Again, Jeremiah, my first 4 trades, following exactly your details in the Ultima class, have just closed out, good till canceled. Orders set right after getting into the trade. This paid for your class in less than a week. I'm very thankful I subscribed to your services. Keep up the good work. If you follow me over here, theotrade.com/skew, that's actually where the auto expected move indicator is on. Okay, so we'll pop right in here. This is theotrade.com/skew. Again, there are 30 riskless spots. We incentivize you guys to enroll for it today. Okay, why do we do that? Okay, specifically to get you enrolled for it today. It's $297 and there's 30 riskless spots available. Okay, you just click add to cart, and I'm reiterating one more time. Just don't forget, put in a valid phone number if you want text messages. Otherwise, we have to send you an email and get you to actually text us a code and get back to you to get you in the text messaging. But it's the easiest way, and it's $297, $149, in 2 payments, or you can even do 3 payments of $100. And again, all of it has the money back guarantee. I will even let everybody know, as you're enrolling. So I'm going to answer a couple of questions. Okay, I'm going to answer some general questions and then some really specific questions. All right, onward and upward over here. Just wanted to drop you a quick email. I think the class has been wonderful. I've been stretched each session, but not beyond my capability. After each session, I watch the recording and do the homework. I feel, each week that my knowledge of options trading is growing steadily and rapidly. Obviously, I can't speak for my classmates, but it's going very well for me. Thanks for the great instruction comes from Jeff, right? This is actually another person, Todd Summerall, that came in here. Basically, we saved his entire account. This is fairly recent, but big hearty thanks to you and all of your team. My finances would have been a goner without your advice, right? Onward and upward here. A couple of questions answered, and then we'll move on to some specifics over here. People always ask us what we need to get started here. I always argue, like, you don't even necessarily need a laptop anymore. You could probably have an iPad. And listen, you don't have to have, you don't have to have the coolest, latest, iPad Pro. Here it is, people. This is the Walmart version, the $299 iPad. It's more than enough to be able to trade off of. Chips not going to make a difference in here, but you need a laptop, iPad, internet connection. We have everything you're going to need from the novice to the most extreme trader. Number 2, this is not a membership. We don't auto renew or bill you again. Second time I've mentioned that, it's important. Number 3, we're now producing weekly video updates. So we provide these weekly video updates to give you all the moves that we're going to make. And that's important. And by the way, it's somebody just told me that it's taking a minute to get people enrolled. So it's fine. Okay, we'll get your name on there. So I'm just, for those of you that are enrolling, a few people were asking in here, how do I know if I'm enrolled and got into the first 30 people? I'll read off a couple of names here momentarily as they actually come in. It takes me, I'm actually looking on my iPad for it right now, but it takes me anywhere from about 5 to 7 minutes as I actually see you enroll on here. By the way, if you're kind of curious, right, you can trade on one of these things too, right? Actually, the best application I've ever had on an iPad, Tastyworks came out with a new trading application for their iPad like a week ago. It is absolutely ridiculous. It's just good. It's as good as their main application. It's phenomenal. So we give you weekly video updates. We archive absolutely everything. If you can't make it, live, don't worry about it. Like, if you can't make it live, we archive everything. You can watch anything and everything that we're doing. All right. We'll provide you access to TheoTrade Mobile, where you can actually download the archives and view at your leisure. You can even download them, be in an airplane, and be able to play them back. It's designed for that. Add your cell phone number when enrolling to receive trade ideas via text message. Okay. Number 7, you can email us anytime, receive a response within 24 hours. So you can email us. The only reason we say 24 hours, okay, is simply this. 24 hours, including trade-related questions. Some people will email us like on a Friday afternoon, there's 5 minutes to go to the cash close. They're like, save me, okay? So I just put that as a stipulation. The average email is answered within a few hours. Again, the average email is answered within a few hours. We're sitting here all throughout the course of the day. We're trading, we're answering emails, okay? So we wanna make sure that you get your trade-related questions answered. But Friday afternoon, we're traders, we trade. Number 8, you're gonna gain access to every course we've done in all the previous years at TheoTrade, classes, coaching, trading sessions. Name a topic, okay? We've created an entire search index that you can go through there, all right? And there's archives on it. Variations of the trades are available inside of an IRA. So if you want to do this in an IRA, you can do that with as little as $2,000, right? We at TheoTrade can help you get approved for options, okay, at several major broker dealers, okay? And remember, there's 30 riskless spots available. Get results, take action, enroll for TheoTrade now. There's absolutely no risk to you. Now I'm going to actually answer some of the really specific questions in here. In fact, I'm going to bring them up off my iPad, make it a little easier. So that was just some generalized questions that typically come up in here. You're going to pop this up here. It's theotrade.com/SKU. Make sure everybody sees that. theotrade.com/SKU. Just a handful of names that are coming through is, again, Kurt W. from Ohio, Craig H. from Virginia, Gene J. from Washington, Lemon B. from Colorado, Paul R. from Texas, Donna H. from Alabama. By the way, 2 of our instructors are actually from Bama. I'll continue to read off names as they actually come in. Again, they take me about 5 to 7 minutes to see on here. Let's get to some of these specific questions. Again, there was I want to reiterate a handful over here. The cost after the first 3 months is the same. It's $297. Can you show us how to use portfolio margin with this? Actually, yes, we do have a course curriculum specifically on portfolio margin. That's part of it. I do use portfolio margin myself. Okay. Is the Ultima class included in a yearly subscription? Everything is. Okay. We don't piecemeal anything. So yeah, if you wanted to sign up for an entire year, you could do that. That's included. Okay. Somebody asked, do the alerts include hedges? Absolutely. So actually, the interesting thing is when it comes to the hedges, this is an inflection point spread. Here's the hedge, and here's actually the sale of premium. They look like they're broken into 2 trades, but it's actually executed as one. Okay, so that's absolutely portion of it. William actually asked a great question. Since one cannot sell naked options in the IRA, will this program still work? Actually, William, that is incorrect. They changed the rules just about 2 years ago. You can, in fact, sell a naked options. This is my IRA. This is my IRA, and that's actually the margin in it. Okay, you can absolutely unequivocally do anything you want inside of the IRA. So it just depends on the different brokerage firms, but here it is. So yeah, that is, again, an IRA account. I figured I'd mention that over there. All right, let me make sure. Timothy was saying, the hedge scares me. I don't know what to do with it. When to close the hedge. Yeah, no, we execute upon that. So that is a big portion. That is a really big portion of the course curriculum, is teaching you when to open the hedge and close the hedge. Okay, the hedge is actually, this is an inflection point hedge. The hedge is actually very self-explanatory. I mean, effectively, you close it, when it's, fully profitable, because once the hedge hits its maximum value, it can do you no more good. So it's pretty straightforward. Somebody was asking, will Ultima help me be a more consistent trader? Okay, of course. I mean, that's what it's designed to do, is actually consistency first. Just premium selling, knocking out premium selling, collecting, 50% in these trades. Listen, 95% of the trades are going to be profitable. Okay, it's that other, handful of trades that we have to worry about with risk mitigation tactics. You'll very infrequently use these hedges, but when you do use the hedges, they're absolutely essential. Okay. So with that, again, I'm going to wrap things up here today. I want to thank each and every one of you for coming out. I hope that I got to all the questions in here. If not, we'll leave Brian, Jeff, and myself are on here to actually just type a couple answers to you. Again, I hope to see each and every one of you here at TheoTrade. I kick off every trading session. So at 9:30 Eastern time, we're live. We're trading with you. By all means, again, enroll, put your phone number in there. We'll even text you out some trade ideas as they come about. Thanks everybody for tuning in today. Have a wonderful afternoon. Bye-bye.